Those gains actually feed into the likes of Dark Trace as well. And then, of course, we have our eye on Antofagasta, which I have to say is a really fun name to say, but their profit falling in line with market expectations. We'll see how that trades, Guy, at the European market open.
Keep it on the commodities. It's going to be a big theme, I suspect, running through the markets this morning. Right, here we go. It is time for the opening trade here in Europe this Tuesday, the 20th. We are expecting London to be a little bit of a laggard today. The reason for that, as we mentioned, keep an eye on the commodities as to what is happening elsewhere. I think it's going to be more of a mixed picture. Keep an eye maybe on some of the pharmaceutical stocks as well. GSK looks like it could be of interest. Looks like Airbus could be in the running for a decent order coming out of Saudi. That could be a factor that we're watching out for as well. But the FTSE, a little bit of softness creeping in at the moment. It's not much. These markets are kind of drifting at the moment. It's mid-August. We're waiting to see exactly what Powell says Friday. Then I think things kind of amp up. Friday into next week, we're going to be talking about NVIDIA. This could be the kind of the low, the mid-August low that we're seeing right now. But there you go. A little bit of weakness into the FTSE 100. We're down by 0.2%. My question is, why?
Well, I think your suspicions were accurate, Guy, when it comes to some of those initial moves. The oil was really the suspect here, especially from the stock 600 as well as the FTSE. You're seeing likes of Shell, BP, even Rio Tinto. The commodity space broadly seems to be what's dragging down this market, at least in early trade. What's lifting it is the tech sector, and I'm curious about how much of that is a read-through from what we saw in yesterday's session. ASML, SAP are your biggest index contributors to the upside, but you're also seeing something of the other kind of heavyweights as well. LVMH, for example, is one of your big movers to the upside as well. So that's going to be an interesting one. We are still waiting for some of the German defense manufacturers to trade. So we'll see if there's a little bit of a buy the dip mentality, Guy, when it comes to those names.
Yeah, as you say, oil is down. I think we probably saw that one coming. Down by okay amounts, actually. IBP's down by 1.25%. Yeah. Shell's down kind of circa 1%. But this risk rally that we've seen over the last few days, the market is basically sort of, if you want to get involved, if you want to get back in, it's kind of an index weight story. So you have to go in and buy some of the bigger names that are out there at the moment. So ASML does well. One of Europe's biggest cap stories. You've got Inditex doing well. You've got some of the tech names, as you say. Airbus is tracking a little bit higher this morning as well. These are the weights I'm talking about here. But luxury is been tracking higher for the last few days. So it's interesting to see that stock story continuing. But this is part of this kind of broader risk rally that we're seeing. But there you go. ASML, Safran picking up a little bit of ground. Hermes doing well. Mercedes picking up as well. These are the kind of names you would expect if the risk rally is going to be kind of continuing here in Europe. It's been a strong performance over the last few days. Really strong performance over the last few days. Feels like the beginning of August is a distant memory for equities.
It absolutely is. And I should mention some of the two other stocks we were keeping an eye on before the market open. Antofagasta, which of course their profit came in a little bit lighter than expected, or at least met market expectations, I think is a better way to phrase it, but a little bit lighter. They're given the expectations were a bit higher. Shares higher by about 0.4%. Dark Trace is the other one we're keeping an eye on, given kind of the fallout with Mike Lynch as well. We're monitoring those developments, but also just given the read-through going into from Palo Alto. Those shares relatively flat right now. We're not seeing a ton of volume there, but we will keep you apprised as we get some of those initial market news. That's your micro. Let's go back to the macro here, because green on the screen seems to be the theme of the day on both sides of the Atlantic. Let's get a little bit more insight here. Emer Walsh, head of investments for Europe over at Mercer, joins us around the table. Emer, look, not a lot of people are at their desks right now. Light volume, light liquidity. How much of this flips, the screen on screen flips, when we see September and we see more volume hit this market?
So I think overall, from a global perspective, we're quite positive on the economic outlook, which is going to have a knock-on impact on equities and be positive. Overall, we're 3% overweight to equities. It will vary by region, so we different views in developed markets versus emerging markets and Japan, more positive on Japan and emerging markets than developed. But I think, you used the word normalization earlier, and that's what we're seeing. Softening in the US, very much soft landing is expected from our perspective. But then from the economies that haven't done as well, so the UK, the Eurozone, a modest recovery in those, which again will kind of drive stock performance over the short term.
So this was a conversation that Guy and I have been having all morning. What is the tailwind for equities here? Is it the prospect of rate cuts, or is it the economic data itself?
So I think there's two big risks in the system at the moment. The first is that risk of recession. We saw the reaction. I don't know, are we calling it an overreaction at this stage?
Feels like an overreaction now. The market's bounced back.
Exactly. It's
what are you calling it?
It's a distant. We think it was an overreaction. We do think the market is pricing in too many Fed cuts for the end of the year. So we're estimating 3. The market is at 4. But we'll obviously get a good indication, hopefully, from Powell on the direction of travel and the speed. But I think the kind of overreaction, as we call it, it's the recessionary fear. That's kind of one of the main risks.
But if we get 3, is that a good thing? Because it's a good thing because the data are okay. So as a result of which the economy is looking okay, so we don't need to chuck the risk assets out of the window.
Yeah, so equities should perform pretty well in that kind of 3 rate cut scenario. It's more kind of on the bond side. If you get more aggressive cuts, bonds are going to rally, but more kind of hawkish, and they will pare back. So we're underweight bonds at the moment. But I think that recessionary fear is the big thing to watch, and then also the geopolitical risk. So Russia, Ukraine, what happens there, the impact on Europe, energy prices, etc.
Just sticking with the bonds for a moment. Bonds did do their job, though, didn't they? When we saw this turbulence at the beginning of the month, we actually saw balanced portfolios delivering some balance. Isn't that a reason to want to own bonds at the moment, given the risk maybe you've laid out?
Yeah, exactly. And, the correlation is kind of normalized again, back to the normalization point. So, kind of more balanced portfolio, diversified. You don't want to go all in concentrated in US equities, for example. We're very much a believer in investing broadly. So that definitely includes a component in bonds, although we are underweight at a global perspective.
So, in order to have outperformed since the beginning of the year, you have had to have been long US tech. You've had to be long US stocks, and you had to be long US tech. That trade is over. So if I can match the market, I can outperform the market without owning tech.
Yeah. So there's actually a really interesting dynamic, I think, going on in active global equities at the moment, not just global, but also regional. And a lot of portfolio managers are underperforming the benchmark, and that's because this index is so concentrated at the moment. So by that, I mean, let's say in the S&P, the top 10 stocks.
Exactly.
It's over 30%. So to outperform in that environment is very, very challenging. So, for example, if you feel Apple is overvalued.
But are we going back to where those kind of more balanced portfolios do better? Is that the story for the rest of the year?
Yeah, a more normalized environment is what we're anticipating.
Let's go back to that concentration story, because there's been this, where we're talking a little bit about diversification, et cetera. But the client pressure that I think we've spoken to a lot of guests on the show about in terms of getting in on that yield has it feels like that would only build in line with the recent correction that we saw, a 10% correction as well. You compare that to what you're seeing in the bond market, there seems to be this honestly building correlation as well between the safety of the bond market and the safety of tech. And I'm curious, going into the back half of this year, especially in the face of a U.S. election, is that not all the more reason to pile into U.S. assets?
From our perspective, no. We do think valuations on the equity side are quite toppy in the U.S., so we don't have a direct overweight position in
even
US
after
equity.
The correction.
Yeah, exactly. Some would have taken it as a buying opportunity, that dip. If you have the right governance, you can facilitate that. But we actually took that correction as a way to go underweight to bonds. So, we very much, as I said, invest broadly, so not that concentration in US tech, but, not going underweight. Going underweight against NVIDIA, they've returned 150% year to date. That would, if you were underweight, you would have a huge detractor from your portfolio.
So give us a range here on the bond picture. How low can yields go?
On the 10-year, like 3.6
by year end.
Yeah.
US 10-year.
Yeah. So kind of 3.6 to 4 is a plausible range. As I said, we are underweight 2 bonds, but we'll be very much watching the data so closely because you get a couple of bad labor markets, it could change very quickly. And I think that recession risk has increased relative to a couple of weeks back.
If the ECB cuts rates, is that a reason to want to own Europe? Equities.
Yeah, Europe is an interesting one. It's very much a mixed bag at the moment. It feels like it has been teetering on recession for quite a while now. Obviously, services, there's bright spots with services, the periphery.
Yeah.
Also, there's a lot of pent-up savings, so they're being spent at the moment, which is what we're seeing coming through in the data. But obviously, manufacturing is the key concern. German manufacturing, what's going to happen with that? But inflation is coming under control, and we think the ECB, has 3 cuts in it before year end.
And what is that? So, ECB cuts by 3. Is that enough of a reason to want to own Europe? Is that what kind of an effect is that going to have right now? Given the kind of it's a really murky picture right now. We don't know what's happening in China. It's like Europe is an open economy. We can't figure out. It feels much more difficult to figure out what the economic trajectory is in Europe.
Yeah, exactly. And we don't have an explicit overweight to Europe at the moment for that reason. So, Russia, Ukraine, since that scenario unfolded a couple of years back, there has been a bit of nervous sentiment against Europe, and I think it's just the impact on oil prices, etc., and how that will affect Europe. So I think let's see how the situation unfolds. Hopefully we can kind of get productivity going and paint a
sounds great.
Here's hoping. But walk us through that ripple effect though on the oil picture. I mean, it feels like 3 years ago when you saw a drop in oil prices, it immediately created this boost in equities because of the sensitivity to inflation. The same argument could be made with even chips as well, given that inflationary picture that was used as a vehicle to kind of hedge that.
Yeah.
Is that mechanism still relevant? If we start to see a drop in oil prices, for example, is that reflected as a transmission mechanism as a tailwind into other risk assets still there?
I think it's there to an extent, but probably to a lesser degree than previously. And that's largely, if you think of Germany, their natural gas reserves, the supply is at a 5-year high, so less reliant on oil prices. So I think that probably, could transpire, but maybe less so than previously.
Well, we'll leave it there. Nice to see you this morning.
Yeah, lovely to see you. Thanks.
Emma Walsh, Head of Investments for Europe at Mercer. This is what the Core 6 looked like this morning. This is some of the biggest trades around Europe. In terms of what we're seeing, broadly, it's the oil price that is under pressure. It's interesting that Nestle is seeing a little bit of weakness today, but broadly, we are seeing technology coming back. We are seeing luxury coming back. The FTSE 100 is under pressure. You've got oil stocks lower this morning. You've also got BT Group under quite a lot of pressure. Let's find out why. I think it's got something to do with Sky, but let's get the details with Joe.
It's exactly that, Guy. It is related to Sky. Now, some potential competition worries for BT this morning. There's a story in the Telegraph saying that Sky will potentially start to be using one of BT's rivals for its fibre network, for its broadband, potentially using City Fibre instead of BT's Openreach network. Currently hosts around 5 million Sky customers, according to the report, so they would be switching over to a rival. And as such, we are seeing a big drop in BT at the open, one that we hadn't had on the radar today, but it's down 5%, one of the biggest weights on the FTSE 100, alongside those declines in the oil price. But that does seem to be the reason, this report in the Telegraph around the Sky network potentially switching over to that rival. Then we'll check in on some aerospace and defence stocks. A few things going on here. Of course, the reports around the German government pushing back on those reports yesterday that they would cut back on defence spending in Ukraine. That does seem to be having a bit of a positive impact on the likes of Saab, though Rheinmetall actually slipping a little bit lower now. We're seeing some gains in Senior and Rolls-Royce. There was that news overnight of Boeing potentially halting production on one of its newer aircrafts due to some issues with an engine mount. Bear in mind, Senior, Rolls-Royce both supply to Boeing, so that is another thing to keep on the radar. But these stocks pretty much positive at the moment. Then we'll take a look at some earnings. down to some of the last of them at the moment. Anto actually slipping some positive numbers in terms of the margins and dividend, but actually the earnings, as Critty mentioned earlier, missing expectations. We've got John Wood, the takeover collapsed a few weeks ago. That's the engineer in the UK, the oil engineer, coming down a bit on their weaker earnings. Coloplast in medical tech, and Salmar, believe it or not, is a salmon company, downgrading their guidance. We're not eating enough salmon, according to them, and they are cutting their forecast today. That one's down 3% over in Norway. Then we'll check in on Voltalia. Now, this is the power company we flagged in StockSwatch, down almost 14% today. Brazil cutting back on some of its renewable power, trying to curtail it. They've got too much renewable energy on the grid, and they think that could lead to a potential blackout. So they are putting some curtailments on the grid. Voltalia hit hard, one of their biggest markets. And finally, in the pharmaceutical space, got one morning call now. JP Morgan downgrading Genmab over in Denmark. They've had a buy rating, overweight rating for 4 years, finally calling an end to that trade. It hasn't quite worked out as well as they would have expected. And Genmab falling 1.5% in Copenhagen this morning.
All right. Joe Easton, I'll take it. Don't worry, guys. I got it. Joe Easton from our equities team, we thank you so much. Coming up, we're going to go right back to the macro here. To cut or not to cut, we're going to discuss the state of the Swedish economy ahead of the morning's rate decision from the Riksbank. A conversation next. Stick with us. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back. You're watching the opening trade. We are 18 minutes in. I'm just trying to work out what the points drops for the FTSE 100 look like. Oil is down. We'll come on to that in just a moment. That's kind of a big chunk of it. But the biggest chunk of it at the moment, 10 points for the FTSE 100, is BT. This is the telecom group. We've obviously been talking about the recent ownership change. But this morning, we've got this story that is coming out of the Telegraph newspaper suggesting that Sky has struck a deal with one of BT's biggest rivals, City Fibre. Obviously, this is a blow in terms of the kind of the backbone network story for BT, and BT will which has got Sky, which has got around 5.7 million broadband customers on its, which is on BT's network at the moment, might switch. So this is why BT is taking such a big hit this morning, and that's translating into the FTSE 100. I'm glad I got there. We got there eventually.
Well done. Well, right next to BT, you've got plenty of the oil majors as well, also weighing on the entire index. Shell is your biggest index contributor to the downside, though, and I think that's pretty significant given the oil price move that you're seeing. Yep. BP is right alongside there, but I also have to mention we've seen some of the other commodity names as well take a little bit of a hit. So Equinor is one, Rio Tinto is another, and I think that's pretty interesting given that really it feels like a concentration on the oil move, but spreading into the broader commodity space.
I need to correct myself. BT is 1.76 points for the FTSE 100. Shell, I think I may have got BP and BT mixed up, is 1.76, but it's still a big chunky amount. But it's basically the commodity trade, as you say. BP and Shell are adding to the downside.
One of the top five contributors to the downside.
We'll get it straight eventually. Instant corrections. Let's talk about what is happening with the Riksbank. It's set to announce its latest rate decision around 15 minutes' time. Analysts expecting 25 bips, 25 basis point cut. Though some, I have to say, are talking about the need maybe for a 50 basis point cut. Nordic economy and government reporter Oits Umelas joins us now from Oslo. So what are we expecting? Is 25 basis points baked in? Is that just a continuation of what we've seen thus far? How big a risk is there that we see more coming through from the Riksbank?
Yes, indeed, all the economists are expecting a 25 basis point cut, but domestically there's been a growing pressure lately for a half point cut, and that's mainly because the economic data that we've been getting lately is on the weak side with very few exceptions. So we've had manufacturing activity going into contractionary territory. We've had second quarter GDP flash estimates indicating that there possibly was a contraction in the second quarter. Unemployment is growing up, and on the consumption side, the data is also pretty weak. So all in all, those hopes for recovery just don't seem to be materializing yet. And considering that inflation has been below the Riksbank target now for 2 months already, that basically shows why the pressure is for an even bigger cut.
Well, wait, it also feels like in the June meeting, well, there was a split in the consensus between whether we get 2 or 3 cuts. Moving forward, what tips the scale, do you think?
So yes, the Riksbank said in June that they will most likely make 2 to 3 further quarter point cuts this year. But they said that was on condition that inflation prospects remain the same. And with inflation below the Riksbank forecast and below its target, that's making some people change their mind. And the market is now expecting 3 more cuts on top of today's reduction.
Let's just talk about the transmission and how quickly it happens. The Swedish economy has reacted relatively quickly, and we have seen the effect of tighter monetary policy coming through. Do we get the symmetrical effect on the other side? If we get rate cuts, and a lot of them, how quickly does that translate, given what happens with the mortgage market, what is happening in housing more broadly? How quickly does that affect the real economy?
Well, indeed, because of the high share of the variable mortgages, Sweden arguably has one of the fastest transmissions to the consumers. We don't really have quantifiable data on that, but some analysts have been arguing that is the reason that basically allows Sweden to have actually lower rates than the ECB, and that would basically allow them to avoid issues with the krona weakness.
Well, speaking of that krona weakness, though, we're also seeing a fairly dovish Federal Reserve lately and a fairly dovish ECB as well. Talk us through the dynamics that the BRICS Bank is then facing when it comes to pressure from these other two central banks, but also the euro and the dollar as well.
The Riksbank has been aware that it can't stray too far from the ECB in terms of rate differential, as that would basically add to krona weakness and possibly then fuel important inflation. And the Riksbank has been well aware of that for the last couple of years. So that definitely is a factor that they will be watching going ahead.
All right, Bloomberg's Nordic economy and government editor Oyt Omolas, we thank you so much walking us through kind of the dynamics that we're seeing ahead of that crucial Riksbank decision. And Guy, again, a 25 basis point cut priced into the market right now. We've got a guest coming up, though, that's saying maybe 50 needs to be on the table.
That's the domestic story at the moment. Everybody's looking at the data coming out. They're looking at what is happening. They're looking at the rapid slowdown that we're seeing in the economy. And certainly the more recent data point to maybe a need for a more aggressive cut. So if we get 25 bips, it's the message we can do much more if we need to, i.e. is it a dovish 25 or you get the 50 and everybody's a little bit surprised. You are seeing some euro weakness this morning versus the Swedish krona. We'll keep an eye on the Nokia Stocky as well, but euro SEK is certainly on the move this morning, and it looks maybe as if the market is maybe pricing in that 25. Maybe there has been some anticipation that we do get 50, and that's being priced out a little bit.
Yeah, well, I think the question you asked at the end about the kind of read-through into the real estate market is the crucial one, because when we had that big panic, I want to say, when was that, last year? You did start to see that kind of form as a roadmap for what could happen if you start to see cracks in the real estate market in other parts of the world as well. And suddenly, the Riksbank became kind of this roadmap for even the Federal Reserve, which I think is a very interesting dynamic, especially when Sweden is operating at an inflation rate less than target. How many central banks can say that right now?
Absolutely. And the discussion point at Jackson Hole is about making monetary policy more effective.
Yeah.
And one of the reasons why it hasn't been is because there's been issues in the housing market in the United States. You think about the fact that a lot of people locked in very low rate mortgages. That has gummed up the housing market, but what it has meant is you don't get the rapid transmission that you would normally get when you see rate hikes coming through. So the economy's been able to run a little hotter because of that effect. Sweden's the exact opposite. It's seen the kind of very tight monetary policy. The effect has been very fast because of that transmission through the housing market. But maybe the kind of the symmetrical side of that is you get rate cuts, and actually you do start to see the effect of that. So it's good. The different central banks seem to be on slightly different paths in terms of how transmission works, and I think that's going to be a really interesting talking point coming out of Jackson Hole.
It is, but I think the currency piece as well is so significant, and I think you mentioned the euro weakness this morning as well. The fact that you're seeing a 25 basis point cut priced in, you're seeing very low volatility, by the way, in the Swedish krona, which is standing out from every other central bank decision they make. Is this just a function of it being an August summer trading day, or is this actually something that is pretty well telegraphed?
We have seen surprises. Central banks have delivered a few of the kind of, let's call them peripheral, that would be the wrong description, but certain European central banks have caused some surprises. Anyway, we're going to be talking about this a little bit more. We're going to get that decision very, very shortly. We'll also get the reaction of the chief economist at Swedbank. He's calling for maybe the need for 50. But certainly what we're seeing this morning is euro-Swedish krona. We're seeing some euro weakness in that pair. We'll get the details of the Riksbank decision next. This is Bloomberg.
Every single thing I've done, it's almost as if somebody has said it can't be done. I mean, I remember I was in a factory and I said, I want to go in the night shift. And they said, no, we don't put women in the night shift. I said, how will I be a successful production manager or personal manager of a factory if I never went into a night shift and knew how a third of my people worked? So in some ways, it has fueled some of my determination. It's fueled some of my okay, I'm going to show this is possible, a sense of I'm going to go get on and do it. It also gives me courage because I feel sometimes I'm not just doing it for me, I'm doing it for everyone else who comes after me. And I always tell women who ask me for advice saying, put your hand up for the most difficult job. Put your hand up for things that are challenging. You know, go in there and lean into things that are difficult, that are challenging, because that's what gives you the greatest credibility, respect, reputation.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
A 25 basis points cut delivered by the Riksbank. That is the breaking news that we have on the screens right now. The rate goes from 375 to 350. As anticipated by most people, we do get that move, and you've been seeing that priced in over the last couple of minutes into the pairs, Euro, Swedish krona. As you can see, we've been seeing some Swedish krona strength. I just wait and see whether we get some commentary from the Riksbank. Riksbank rate cuts, rate can be cut two or three more times this year. So the Riksbank is saying that policy rate cuts can be somewhat faster. So this is the dovish cut that we were talking about. You get the 25 bips, you get kind of a cautious cut, but then you get the dovish commentary that goes with it.
And continue to see strength into the krona, even off the back of the decision. So priced in to some extent, but you were still continuing to see people buy into that currency. I think this is really fascinating, given that we just had this conversation with a reporter out of Oslo as well, walking us through the dynamics here. This is one of the only countries in the world that actually has an inflation rate running below target. So this is really where the case for cuts are far more crucial as well. Let's bring in a true expert here. Matthias Persson, Swedbank's chief economist and global head of macro research, joins us this morning. Matthias, you came in expecting, or at least calling for, a 50 basis point cut initially. They're coming out with 25. Walk us through your take and your initial reaction of what we're seeing.
No, I think this was highly expected. So our call was a 50 basis points cut. However, I think given where the Swedish economy is, you know, we are interest rate sensitive economy. We have really felt the Swedish economy, the hikes that the Riksbank have done. And this is very restricted territory we are. So it was a very expected cut today. Unfortunately, not 50 basis points, which I think the real economy really needs.
It is the case now, therefore, for an accelerated path lower. The statement comes out, says policy can be cut 2 or 3 more times this year. This can be done at a faster rate. Is that what you would now expect to see, Matthias?
Yes, absolutely. I think this was if it wasn't 50, this was the best outcome. They are a bit more dovish, and they are clearly seeing that the Swedish economy needs more cuts. And as I did this morning, I think is very good. We might actually have a cut already in September, so in a month's time, and the difference between a 50 basis points cut today and an additional one of 25 in September is very, very small. So I think this was very, very good.
So Matthias, walk us through some of the dynamics that we are seeing within the Swedish economy as well. I want to get to kind of the transmission mechanism the guy was talking about earlier in the show as well when it comes to real estate. But first, can we talk about unemployment for a second? Walk us through the issues in the labor market in the Swedish economy for a global audience that may not be necessarily monitoring that tick by tick.
No, so during the summer, the unemployment in the labor market showed some resilience and actually was quite stronger than we expected. But domestic economy has really been hit by the rate cuts that we have seen in order to bring down inflation. So what has helped and kept growth a bit higher than it would have been otherwise is export. Export has performed very, very well. Also investments, but the domestic demand is very, very low. You know, variable interest rate is the most popular rate to have today, roughly 60%. All new mortgages that are taken out and have been taken out this year has been variable rate. So we have really felt this. And that means that consumption, retail sale, everything has been weak. Construction, for example, of housing and housing investments are very, very low. We have seen a fall, really a very clear fall in housing construction. That will not start. That will not start this year. Maybe a bit next year. So the domestic economy has been really hit by higher interest rate. I think that's good because we understand how monetary policy works, and then the Riksbank needs to step up and increase the pace, as they clearly have said today, with more rate cuts coming in the near future.
And Matthias, I believe the second quarter output, has actually, the preliminary readings of that aren't looking that strong either. What is the issue there? Like, is there a certain sector that is coming under particular weakness, or is this something that you're seeing just broadly across the economy? Where historically can we find those parallels?
I think the weakness in particular in the Swedish economy is everything related to household consumption. So retail sale, consumption, very, very low. Very weak. We haven't seen any pickup in that at all, and we wouldn't really expect it. We had a first rate cut in June, and from that we would expect a slight increase. So really, retail, construction, we could see today that some of the construction firms are seeing the weakness continuing going forward, and are planning to lay off more employees going forward. So our forecast is really that we think unemployment will continue to increase during the autumn, winter, and we need more rate cuts. So it's really, everything related to households in the Swedish economy that feels the higher interest rate that have pushed down Swedish economy. So particular retail, I would say. Retail sales is very low.
Matthias, how quickly does a rate cut in Sweden transmit to the economy?
When I say fast, that's because we have variable rates. So most are linked to 3-month interest rates. And it takes probably 3 months to 6 months to have a full effect of the rate cut we see today. And that is much faster compared to many other countries, for example, the Eurozone or the US for that matter. So it will transform, but it takes time. And that's why I have 50 basis cuts today, because households can see that things will improve in a year's time, but we are not there yet. And then the central bank and the Riksbank needs to push rates down. And we are, today after the cut, we are at 50. We estimate that the neutral rate is somewhere close to 2%. So there is still quite far to go for the central bank to actually reach neutral level.
Okay, so in terms of how long we stay at that neutral level, once we get down, are we back into a hiking cycle? Given the speed of transmission, how easy is it going to manage those last kind of phases? Are we going to see more volatility? When do you think the first hike comes through from the Riksbank?
That's very good. I actually, in our current forecast, we don't have any cuts. And we are just updating our forecast for 26 as well. But I think cuts can very well come. But I think for now, it's really cuts that are needed. When I look at the Swedish economy, in our latest forecast and how I think about it going forward, this is the first time for a very, very long time where we will have monetary policy easing, and we also expect fiscal policy to be a bit more expansionary because we have, as you know, we have a very low debt to GDP in Sweden, just above 30%. And we know that the Minister of Finance wants to be a bit more expansionary in the budget for next year and probably also for 2026. So I'm super optimistic. Of course, we don't know exactly what will come out of both the rate cuts and also fiscal policy, but I'm optimistic about the Swedish economy growing above potential for 2025, and I would expect 2026 also to be very strong for the Swedish economy.
All right, certainly something we're going to be keeping an eye on. And Matthias, of course, as we speak, we're starting to see weakness actually show up in the Swedish krona, perhaps pricing in what that future trajectory looks like. Matthias Persson, Swedbank Chief Economist and Global Head of Swedbank's Macro Research. We thank you so much. Folks, stick with us. We're going to keep you apprised of all these market moves and get back to the macro story in just a few moments. This is Bloomberg.
Make sure that we're exposed to categories that continue to be relevant to consumers, that we're positioned in categories where we have a competitive right to win.
By strategically adding and shedding assets, General Mills has turned over about 20% of its net sales base in the last 6 years. It's dramatically expanded its pet food platform, starting with the purchase of Blue Buffalo pet products in 2018. That expansion dovetailed with a boom in demand.
Pet in the U.S., pet feeding and treating, is a $50 billion category. It's almost 5 times the size of a category like cereal.
Is this the future of the company? I mean, we so much associate General Mills with breakfast and cereals, human breakfast and human cereals. Are we now going to be thinking about General Mills much more as a pet food company?
I think you'll be thinking about General Mills as a food company where we treat all the members of the family like family.
The humanization of pets is actually the biggest driver of pet food and pet treating growth. It has derivatives in not only feeding, which is the core thing that most households where most of the dollars go against the pet, but treating. And then you start to branch out to things like vitamins and minerals and supplements.
People really love their pets. They want to take care of their pets like they do their family, and it really is a global phenomenon. That's why we recently entered the China market with Blue Buffalo. That's why we bought Edgar & Cooper recently in Europe, because we see the same kinds of trends that have played out here in the U.S. playing out all over the world.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back to the opening trade. About 42 minutes into today's session, you're starting to see a little bit of green on the screen when you look at the Stock 600 higher by about 0.2%. Some outperformance as well in the German index. It looks like perhaps a little bit of buying back on some of those defense names, but underperformance right here in the UK. A lot of that's coming from the oil story and, of course, BT Group, which are taking a good chunk of the losses as well. But this all follows some green on the screen that we saw over in the States yesterday. Perhaps a little bit of some of the betting that the Fed is going to signal it's ready to start cutting rates. A little bit of a ramp up going into what we're seeing on Friday in Jackson Hole. Let's get the thoughts. Virginie Mason, who joins us around the table, Global CIO of Equity over at Allianz. Thank you for joining. Thank you for coming up. It looks like a light volume, light liquidity kind of environment. Everyone's waiting for the macro. The debate around this table this morning has been, do rate cuts help? Is that a tailwind for the stock market, or is actual economic data what's driving the stock market? What do you think?
Well, I think it's about the glide path. So it's the data in addition to the earnings power, which is linked to the growth, right?
Yep.
So is the growth really a soft landing, which it looks like it is? Which companies are going to do well? But all this said, a fair amount is priced in. If you look at markets of 23%, where are the opportunities? Perhaps one of them is, if we have, in fact, a slightly softer dollar, is in emerging markets, because they've performed on a 12-month basis about half of that, right? So you have to look for those nuggets of growth that you can position in, but still have a very careful portfolio construction, because we'll have bouts of volatility. It's around the election.
Do those bouts of volatility come more frequently? Because we haven't had one for ages, and then we get a big one.
Yes.
Is that something that I should get more used to?
I think over the next few months, until the U.S. election is in the, down, until the French resolutions happen, until, you have those bouts of political linked volatility where the markets, we have very little control, right? We can observe, we can analyze the tendencies, but in the end, there's an element of loss of control, so you have to plan through diversification.
When we talk about the diversification, though, I mean, we've been hearing this. I feel like that's been the narrative for the last couple of years as well, and yet there's so much client pressure to say, well, look, NVIDIA rose 1,000,000% or whatever it rose in one day. Why are we not in on that? And that seems to be what's creating this kind of almost short squeeze and this momentum-driven trade. Does that just go away?
I think it will take a bit of time, because, of course, you have the indexing or the ETF factor there, right? When you have such a concentration in U.S. tech in the U.S. market, the unraveling, even if you had lower performance, would take a long time. I think, however, if you look at, I know for some of our quant strategies, where you control your tracking error and you're very mindful about positioning on an acqui basis, there's still a lot of added value that you can have for portfolios. U.S. equity only is more difficult, for sure.
If I am underweight tech, am I going to underperform the market over the remaining part of this year and into next year?
What is tech?
Okay. If I'm underweight the Magnificent Seven, am I going to underperform?
I'm asking. I'm being a bit cheeky here, because I think we
welcome that on the show.
Thank you. We like software. We like the second wave. We like the enablers. We like the next wave of productivity enhancement. In terms of the Max 7, it's not one group of Max 7. You have quite a few companies in that group. You want to own some of them. But the benchmark weight, again, if you run a U.S. fund only versus a global fund, is going to be... So you want to have exposure, but you also want to be in the lower valuation second wave of enablers, because this is where the big, I think, next wave is coming.
But doesn't it create almost a vulnerability to this massive CapEx spend, that whereas an Amazon or an Apple or a Microsoft can write that check and not think twice about it because they're sitting on these massive cash reserves, that second wave has a far more upfront cost with a far longer kind of return on capital. Why is that not a bigger concern?
Yes, that's absolutely right. And I think this is why it's taken some time, right? We've been in the plumbing phase, and you're right, the billions of CapEx from the large companies, that can happen. And this is why this is the second phase, because companies that are smaller will need to see really what the benefits are in order to spend the money. But we are starting to see that through applications, right? Although, to be honest, it's been a little bit harder, one would say, and it's taken a little bit longer, but I think this is what's coming. But carefully, because some companies are going to benefit and some won't.
Well, it also, we both want to get in on this conversation, but it also feels like the only reason that there is so much of this kind of appetite to even do it is because the economy is expanding at the moment. And this is you're seeing a lot of resilience. There's a lot of still extra cash in the system, whether you're talking about consumers or businesses as well. What happens if that recession does hit? What happens if we get a new administration in 6 months' time? To me, I feel like we have so much excitement about this sector and the second wave, and yet the risks are piling up, and no one seems to be hedging even against it.
So I think this is why you want diversification. This is why you want to also look, and I was saying, in the past few months, we have rebalanced some of the portfolios towards a more defensive tilt. Now, clearly, growth versus value versus quant, very different portfolios. Because you will have that as a risk. Now, clearly, I wrote something recently, summer storms, political winds, right, coming up. This is why, depending on which candidate will win, you'll have more of an inflationary element, less of an inflationary element, etc. Your differences, that will have an impact on future rate positioning.
But so far this year, diversification has equaled underperformance. Does that change, given some of the tensions that you're talking about?
I think, well, in our case, diversification for some of our strategies, again, I'm talking ACWE, not US only, has actually worked very nicely. Okay. So looking forward and facing the between now and November election in particular, I think you have to maintain quite a balance while keeping your appetite for long-term trends, which is what that technology, digital Darwinism, transformation is going. But you have to be very mindful of air pockets and pick stocks. Trade a little bit, even if you're a long-term investor. If you have those bouts of over-enthusiasm, trade a little bit. If you have pessimism like we had, a couple of weeks ago, trade a little bit. And look at it on a global basis.
For the last few years, currency has not mattered to most equity portfolios. That feels like it's changing now in quite a big way.
Yes.
How do I think about that now? Because a lot of people haven't been doing it, and I'm wondering how you do it properly.
So this is true. So for us, as bottom-up investors, it's mostly bottom-up and through earnings, etc. But I do agree that if you think between now and year-end, clearly you have the yen, right, part of the equation, and the dollar. Softer dollar could be very good for emerging markets in general, and then you have to be, right? For the yen, or Japanese team is still very enthusiastic about parts of the market, but you have to be very mindful. The key question then is what happens to the euro. The situation in Europe is inflation is a little bit more sticky and growth a little bit slower. So again, we go back to we go back to the glide path and what happens in that, because in that environment of growth more slow, you looked at the German numbers recently, etc., you'd want more rate cuts. At the same time, we have to see what service inflation is doing. So I think yen, euro, dollar, we're going to have some movements there, which actually is not a bad thing.
But is that just kind of a little bit of a correcting a dislocation that we're seeing? Because as you talk about weakness in this manufacturing sector, looking at a 110 handle on euro dollar, it feels like the pricing you're seeing is not aligning with the fundamentals that you're laying out. And I'm curious how much of the Japanese story still functions as a hedge, given almost the elimination, or what we're expecting to be the elimination of the carry trade.
Well, so I think it depends on why you invest in Japan. Do you invest for transformation, productivity, some of the consumer recovery?
Well, why would you invest in Japan?
Exactly.
You tell me.
Exactly. Those are the reasons why we see some good consumer companies, we see some interesting financials, we see some interesting technology companies. Small cap, Japan is a big place for small cap, and we find a lot of attractive opportunities there. I'm not talking about leverage and carry, and because this is something that I would say is not something that we do in equities.
Sure.
Okay. I'm going to wrap that up. Great to see you.
Thanks
for stopping by to see us. Really appreciate it, as ever. Virginie Maisonneuve, Global CIO for Equities, joining us from Allianz Global Investors. Let's talk about what is happening with the markets right now. I think we are waiting for Jackson Hole. There's a few pockets that are quite interesting, though. The chip story out of Germany, Ollie was bringing us that story a little bit earlier on. There's quite a lot of activity yesterday in the chip space as well. As you say, quite a big recovery coming through towards the back end of the session.
Yeah, and this was something I think that follows on yesterday's session over in the States as well, simply because we did see the likes of AMD, NVIDIA, and others rally. Some of that was deal news as well, kind of feeding into it. But this morning, you're seeing the likes of Infineon, for example, higher as well, higher by 1.5%. So the entire chip sector here, a little bit of a catch-up trade to what we're seeing in the States, perhaps some of the fundamentals as well.
But ASML, in terms of where we're seeing the points kind of being added in terms of the European performance this morning, at least on the stock 600, you've got ASML, SAP's in the tech space is in there. Let's call Schneider part of that tech story as well. ASMI, some big names towards the top end of the market. So tech definitely doing well. Luxury's performing as well quite nicely. Bit of an AI trade in there as well. So Europe's looking okay, and certainly we're well off the lows earlier on in the session. It's not by much, but we're off the lows.
Well,
anyway,
a little bit of a defensive trade in there.
Okay, maybe. We're coming back a little bit. The rally continues. The German Chancellor Olaf Scholz visiting the site, of course, of the new $11 billion semiconductor plant in eastern Germany. It's near Dresden. The facility is 70% owned by TSMC. It's in partnership with several European chip makers. Well, Ollie Crook's here with the details on that story. Ollie, we talked to you a little bit earlier. It's an exciting day for Germany. Why Germany, though? This is my question. Why is this plant ending up near Dresden?
Yeah, listen, Guy. Well, listen, as we've talked about a great deal in Germany in terms of we've had the huge wealth generation mechanism in Germany, which has been the past dominance of industries like the auto sector, chemical sector, all of those sorts of things. All of those have been basically called into question in terms of the future and the slow decline. The question is, where does the growth come from? And the answer for many of the people within Germany and the government increasingly is from the chip sector. They've already got a massive chip company, Infineon, that operates in Dresden and Saxony. They are now also adding to that with huge amounts of subsidies. They're giving 5 billion euros just to build this plant for TSMC. They're giving 10 billion to Intel. And it's important to bring TSMC into Saxony, into sort of so-called Silicon Saxony, where you have the center of all of this sort of silicon production within Germany, because they do much more advanced chips. They do the most advanced chips in the world. And so if you start adding production of that kind to that sort of ecosystem, it starts to build it out in a significant way, in a meaningful industry for the future, because obviously you need that infrastructure, you need the companies there, you need the labor force, and you need to build all of that out. And the Germans are really putting a lot of energy to attract that talent down into Germany, and particularly in Saxony near Dresden.
But put this into the context as well. You talked about this in Germany relative to the rest of the world that's also very involved in this chip race. How are they doing?
Yeah, well, listen, they're still pretty behind, all things considered. I mean, they still would like to attract more and more people. They're doing so with TSMC and Intel. But it's really important for them not only to have a sort of future-facing industry, but also to service their current industry, right? Cars take a huge number of chips. The EVs take even more of them, more than twice as many as internal combustion engine cars do. So they need to build all of that out. So for them, it's a high priority. Ursula von der Leyen's there. And for the EU, they want to build 20% of the world's chips in the next sort of 5 or 6 years, which is probably almost impossible. But if they want to hit even a fraction of that, they're going to have more and more projects like this, and they're going to have to potentially subsidize them, because we know that it's happening in the United States, we know what's happening in China, and Europe wants to be competitive and have its own domestic production.
That's why Taiwan has been so successful. Very close relationship between government subsidies and what has been happening with industry. Ollie, great stuff. Thank you very much indeed. We're looking forward to the coverage throughout the day of the opening of that plant. Let's talk about some of the stocks that will be moving here in Europe this morning. BT under a little bit of pressure. That's why the London market is in some ways something of a laggard. The reason for it looks like Sky is going to be going with an alternative vendor for the backbone for its broadband network. BT down by nearly 5% on the back of that. But the real weight in London, Critty, is the oil story.
It really is. You're seeing Shell from an index contribution perspective down a whopping almost 2%. BP in line with that, together making down about 17, almost half of just those two companies, half of the move that we're seeing lower in the FTSE 100. So red on the screen, but let's see if it kind of comes back. Maybe this is just a little bit of a amplifier effect of what we're seeing in the macro.
We're going to have to watch the geopolitics. We're going to have to see what happens in and around, obviously, what the story is with Gaza, what happens in the Gulf as a result of that, what Iran does as a result of that. So there's a lot of moving parts here, but the real kind of break on the oil story has been what has been happening in China, and that has continued to act as a break, which is why I haven't seen upside maybe when it comes to the oil price when we get worse news coming out of the region. Anyway, let's talk about what's next. The Pulse is coming up. Francine Lacroix on deck. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Global stocks are set for their longest winning streak of the year, with investors betting the Fed will soon signal it's ready to cut rates. U.S. President Joe Biden delivered an emotional and bittersweet call for Democrats to rally behind Kamala Harris at his party's national convention in Chicago.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career.
Plus, Israel has recovered the bodies of 6 male hostages who had been held up in the Gaza Strip. It comes as U.S. Secretary of State Antony Blinken heads to Egypt as he presses for a ceasefire deal between Israel and Hamas. So it's Tuesday morning, so let's take a look at the European markets map. But it's incredible to think that only 2 weeks ago we had that huge sell-off in the markets that now seems like a distant memory. Now, stocks definitely ticking higher, maybe not as much as yesterday. We're seeing a bit of pressure on the FTSE, down some 0.4%, but we did have a pretty buoyant session on Wall Street. And again, this is on bets that the Fed, with Jackson Hole approaching that very important speech of Jay Powell on Friday morning, will probably soon signal it's ready to start cutting interest rates. S&P futures gaining 0.1%. Gold spot, this is an extremely important move. We look at copper and gold today, with gold at 2,515. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So global stocks actually set for the longest winning streak this year on bets that the Fed will signal it's ready to start cutting rates. It comes as central banks diverge on the rate path ahead of the Jackson Hole meeting. Well, let's bring in Eric Nelson, macro strategist at Wells Fargo, and Justina Lee, Bloomberg Markets reporter. So thank you both for joining us. Justina, we'll talk about gold in a second. Eric, when you look at some of the diverging paths that central banks could take, I think it's just a really difficult call whether you put inflation above growth. I know they have different mandates, but what are you expecting to hear from Jay Powell?
I think it'll be a relatively dovish message, right? I think the key message that we'll get is expanding upon what we heard from the July statement, which was the risks around the mandate are becoming more balanced, more shifting toward sort of unemployment rather than inflation. And so I think we'll probably kind of focus on that message. The question for me is we have a very dovish expectation already. We're looking for markets pricing in almost 100 basis points of rate cuts by the end of this year. Can he really meet that high dovish bar? That's what I sort of worry about, and I think it'll be difficult to do that.
Yeah, and again, just in terms of character, Jay Powell doesn't usually say too much, right? He's extremely cautious because things shift quite quickly.
Yeah, I mean, to use that word from TikTok, he's pretty demure, right? And I think that, it's at an interesting point because kind of as Eric mentioned, I mean, markets are expecting 100 basis points of rate cuts this year. But I think Jay Powell will be especially careful this time, especially given that there's still one more set of CPI and one more set of jobs number ahead of us. And if we look at the mixed signals that we've gotten from U.S. economic data so far, I mean, it definitely doesn't look like we're heading for a very imminent, sharp slowdown. So I think the case for 50 basis points would just be to sort of like act in advance and maybe kind of have some room to pause there. But I think it's kind of hard to see what would justify a 50 basis point cut in September at this point.
And Eric, what are you expecting? Again, I guess if you look at history, once the Fed starts in a cutting cycle, like a lot of the big central banks, and they continue cutting gradually, or maybe with bigger cuts, but they continue. Could we be one and done, or one and done for this year?
I think we're the labor market's weak enough where I'd be surprised to see a one and done. I think if they're going 25 basis points, I'd expect to see a couple. At least 3 or 4 meetings in a row. If it's 50, it'd be very hard to see 50 and done. Probably they go 50 twice because the labor market is very weak, and you see the unemployment rate rise another 3 percentage points. But I think given how weak the labor market is, we're looking at a string of cuts here.
Yeah, and so that's moving gold.
Yeah, exactly. It's kind of interesting because we've seen gold rally all year, even as yields kind of surged. And now that yields are falling, I mean, it's kind of going back to that fundamental relationship where when yields fall, gold tends to rally. And so I think it's kind of interesting because it speaks to that sort of fundamental support. But at the same time, I mean, all year long, we've been talking about central bank buying, maybe kind of a lot of people buying as a sort of portfolio hedge. And now you kind of have all these forces sort of converging here, which is pushing gold to the record high.
So, Eric, I mean, when you look at, I know you're a macro strategist, when you look at how the market's behaved in the last 2 weeks, I mean, it's incredible that, it feels like a distant memory, but I remember that Monday morning was really quite a sell-off, and Justina was with me, and it was kind of like we're all wide-eyed and saying, what happens next? I mean, what do you take away from that period? Was it just a volatile August? Was it an unwinding on a carry trade that's been undone, or is it actually markets behaved as they should have? So that's a relief after the 3 years we've had.
I think it was a very technical sell-off. What really makes me think that is credit really did not budge all that much. Yes, spreads widened, but volatility overall in the sector, the sort of conversations we had with investors and sort of the market participants, there was not real recession concern. I know that was the big headline after the jobs report, but looking at growth forecasts, looking at the behavior of credit, all that told me that there wasn't real true panic. And there was some carry trade unwind, there was some technical unwinds in other sectors, but and look, there's not really recession fears out there from people I talk to. And if that changes, that could be a real paradigm shift for everything, frankly.
Are we underestimating the, I guess, lull that we're seeing in China? So we're just getting a breaking news headline, Justina, China weighing letting local governments issue bonds to buy homes. I mean, this is weaker. This is kind of, their Achilles heel, and it's not getting any better.
Yeah, I think the big question in China here, I mean, is we're probably going to get some slowdown in global demand. And so their export engine is unlikely to be able to support that growth target any longer. And so I think we're waiting for these like big moves to support consumption. And I think the one you mentioned is probably just one of them. But are we going to see more decisive moves in a kind of policy where China has always been pretty reluctant to really push it? And I think that's sort of the big question here.
Eric, your thoughts on China? And again, I appreciate the fact that there are not many people talking about recession, but expectations of the U.S. economy are moving quite a lot. It's like a roller coaster.
It's true. And given looking at growth forecasts for the U.S., how they've evolved over the course of the year, they've generally gone one way, which is up, right? So there is a lot of still optimism, lingering optimism around the U.S. economy. The problem is the U.S. economy is weakening. It's not reflected in the forecasts or, I think, the general market. And China remains very weak. Now, these are the two sort of key engines for the global economy. Neither one looks particularly strong at the moment. And that, to me, is an issue for global growth, and I think is a risk that's underappreciated by the market right now.
What happens to the Bank of Japan? I mean, that's the other, I guess, big risk. I don't know whether they changed in their communication or what they've learned from the last 2 weeks.
Yeah, one interesting thing is I think there were headlines this morning saying that they just released these research papers indicating there could still be rate hikes coming this year. Well, I think that if that's the case, the lesson they've learned from this episode is they need to pay a lot of attention to market sentiment, even if it's kind of beyond their control and it's not their fault and all that. But I think at least they should be in a slightly better position now that a lot of the leverage has presumably been flushed out of that yen carry trade.
Eric, is the BOJ almost more market moving than Jay Powell's speech on Friday?
Well, I'm not sure. I think the BOJ, look, while they have been more hawkish of late, they're not moving at every meeting and they're not moving, with particular urgency, right? So I think there's much more focus on Powell here. You could see a little bit of movement in, say, the pricing for the next couple BOJ meetings, but is that going to be a big macro mover? I'm less convinced.
All right, thank you both. Eric Nelson there, macro strategist at Wells Fargo, and our markets reporter, Justina Lee, both stay with us. Now, Italian rescuers are searching for those still missing after a luxury yacht sank off the coast of Sicily yesterday. The Italian news agency ANSA says Morgan Stanley International Chairman Jonathan Bloomer is also among those unaccounted for, along with British tech tycoon Mike Lynch. Let's get more with Olivia Solon, Bloomberg's technology editor. Olivia, thank you for joining us. So what do we know actually happened to the yacht? How did it sink?
So it was the early hours of yesterday morning when there was a very violent storm and the boat sank. We know that it was a sailing yacht. It has a very big mast. We're not exactly sure how it sunk, but that mast would have made it, move around in the wind a lot. And we do know that local fishermen were staying in port that night because of the weather.
So who do we know was actually on board and who's unaccounted for?
So we know there were 22 people on board in total, 12 guests and 10 crew. We've been trying to confirm the people who remain missing. We know that Mike Lynch is missing, his 18-year-old daughter Hannah, Chris Morvillo, who is one of his lawyers in his recent fraud case from Clifford Chance, Nada, Morvillo's wife, Jonathan Bloomer, the Morgan Stanley International Bank chairman, and Jonathan's wife, Judy, are those missing. One person has been confirmed dead, and the other 15 have been rescued.
So what do we know is the latest with the search and rescue effort?
The search and rescue effort is ongoing, but we're hearing from local reports that it's becoming less and less likely that any survivors are going to be found. The UK government's Marine and Accident Investigation Branch has sent out 4 inspectors to go and help the search and investigate what took place.
Olivia, I know it's early days, but it just seems incredible because they were so close to the shore. Was this just a freak storm?
It was a very violent storm. It's not super uncommon, but it was a very violent storm and a sailing yacht with a very big mast, which potentially made it more unsteady in the water.
Olivia, thank you so much. Olivia Solon there, Bloomberg's technology editor. Now, coming up, more on what to expect as central bankers gather at the Fed's Jackson Hole Symposium. That's next, and this is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Was going to keep reading World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This week, Balance of Power is live in Chicago for the Democratic National Convention.
So we've got a race here, and the sprint begins.
We'll bring you breaking developments.
Vice President Kamala Harris closing the gap with Donald Trump.
And informative analysis, all leading up to special coverage Thursday evening, including Vice President Harris's acceptance speech as the Democratic nominee for president.
As president, I will show Donald Trump what real leadership looks like.
Tune in all week on Bloomberg Television.
The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacroix here in London. Now, still with us to talk about markets, Eric Nelson, macro strategist at Wells Fargo, and our markets reporter, Justina Lee. So thank you both for staying with us. Eric, we were talking before about the BOJ and actually what we saw over the last 2 weeks. How much of the carry trade is still to be unwound? I mean, there were kind of bets were unwound, and then they were put back on.
Yeah, I think quite a bit. I mean, just looking purely at the yen and looking at positioning in futures, 65% of that's been unwound. That doesn't mean dollar yen can't go lower, right? And I think the next phase of that dollar yen downside has to come from hard landing risks, right? Recession risks. Like I mentioned earlier, this is really not priced into the market, and that can really unlock us back to 140 or lower. I don't think we're quite there yet. I think what you've seen in the last couple days has been a lot of focus on value. So the yen's performed. The renminbi's performed, but also Norwegian krone, some of these very cheap currencies. And you've seen a lot of flows back into emerging markets. And that right now is not so much about the carry trade as much as it is some of those unloved EM currencies. It's not the high carry Mex peso, it's other currencies.
But Eric, so the Bank of Japan also released a pair of research papers highlighting the persistence of this inflationary pressure. So again, is there still a case to be made for another hike soon?
I think so. I think they can go again in October. I think it's probably going to be a 25 basis point move. But, of course, this is very contingent upon market volatility. That was the message from Uchida a couple weeks ago. We know that if dollar yen is falling like a knife, like it was a couple weeks ago, the BOJ is not going to hike rates. It needs to be a calm environment. The Fed probably was moving in 25 basis point increments, not 50 in that scenario. So it's not necessarily going to be this unbelievable support for the yen in that environment.
We also know that the divergence of views on BOJ policy, of course, has been emerging among some of the candidates to become prime minister in Japan. So what's your take on what are you looking for in Japan and yen?
Yeah, I think that really is a big question here. And I think, the dollar is a big factor here because a lot of people have been pointing out that if you look at a lot of the fundamental measures, the dollar kind of still remains overvalued. Of course, some of that is because of dollar asset buying. But are we still going to see a move there? And also, what's going to happen to head of Japanese inflation, right? I mean, as the research papers pointed out, they're still looking pretty sticky. And that is the picture that we've been seeing globally.
Bank of England, it's not dull, but actually the UK economy has been doing okay.
Yeah, it's been doing pretty well, I'd say. Maybe one of the better performers in the G10. And, there's a lot of negativity towards sterling and the economy. That's shifted. I think in FX space, there is a lot of long positioning in sterling already. The BOE is priced for much fewer cuts than peers, which I think is fair. UK inflation is strong, growth is strong. We'll hear from Bailey this week. I'm very curious to see that, right? He tends to be more dovish than the rest of the committee. I think that's a risk here short term for sterling. But at the end of the day, it comes down to data. And I think sterling, you probably need to see the inflation environment shift for sterling weakness to come through, and we're just not there yet.
But Eric, was there a shift in, it struck me in the Bank of England press conference last time that they seem to have dismissed some of the pressures that come from persistent inflation because of geopolitics or high oil prices. Is that a mistake?
Well, I think they've been very quick to dismiss a lot of kind of strength in inflation and wage. So there's been a lot of, I think, that brushing aside. I think it's fair for them to continue to maybe start cutting rates, right? Chief Economist Pill has made this point that even if they cut rates, they're still in restrictive territory given where headline inflation is. Real wages are very strong. I think it makes sense to kind of take some of that top-level restriction off. But, it's going to be a slow process, right? They barely voted for a cut. It was 5-4 vote. They're probably moving every other meeting, not every meeting.
What's your it's one of the most interesting, actually, central banks, but they've also been lucky because it's gone their way.
Yeah, exactly. And it's kind of funny because we've kind of see this big split across the ECB at the last meeting. And I think a lot of central banks are kind of grappling at this stage with a lot of the sort of contradictory forces, right? If we think of what the ECB is facing, for instance, inflation has kind of picked up a little bit in July, but at the same time, we've seen a bit of a growth slowdown. And I think in both the UK and Europe, kind of on a more structural basis, they're also thinking about, productivity growth, right? Why is this so much slower? Because that, even though it's kind of hard for the central bank to solve on its own, that has a big impact on kind of the dynamics between, economic growth and kind of inflation there.
And Eric, I guess one of the pressures comes from wages. How's that dynamic going to go into next year?
Yeah, we'll get the wage numbers later this week from Europe, and I think the reality is, the underlying wage picture in Europe has been soft. You've seen corporate profitability has definitely taken a hit, so it's pretty hard to maintain those higher paychecks. I think that's kind of the risk of the cycle that we're looking at here is corporate profitability continuing to deteriorate. That could hit the labor market, but that to me is more of a 25 story, and we're really just not at that point yet.
All right, thank you both for joining us. Eric Nelson there from Wells Fargo and Bloomberg's Justina Lee. Coming up, Antony Blinken says Israel has accepted a ceasefire proposal and Hamas must now do the same. We'll have more on the U.S. Secretary of State's visit to the Middle East next, and this is Bloomberg.
Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
The conversations that matter, the insights you need. This is A Pulse, and I'm Francine Lacqua here in London. Now, Israel's military has recovered the bodies of 6 male hostages who had been held in the Gaza Strip. It comes as U.S. Secretary of State Antony Blinken arrives in Egypt from Israel as he attempts to finalize a ceasefire deal. Now, for more on this, let's bring in Bloomberg's Abir Abu Omar. Abir, what's the latest on the Israeli military operations to recover the bodies?
Good morning, Francine. So we just reported this. This is an overnight military operation where Israel just announced that they have recovered the bodies of 6 male hostages from Khan Yunis in northern Gaza. One of them is a 79-year-old who is thought to have been killed during captivity by Hamas. So Benjamin Netanyahu, the Israeli prime minister, came out in a statement and said that Israel is going to make every effort to bring back the remaining hostages, whether dead or alive. Now, we know that out of the remaining hostages in Gaza, 40 are believed to be dead. But the efforts continue. As you mentioned, Antony Blinken is heading to Egypt today after he was in Israel, where he had conversations with Netanyahu to sort of reach the ceasefire deal.
Abir, Blinken has just arrived also in Egypt. What's the status of these ceasefire talks?
So, we heard yesterday that on Sunday, when he was in Israel and met with the prime minister, that Israel has agreed to a ceasefire deal. But what remains now is the acceptance of Hamas. So what we're waiting for right now is for Hamas leaders to come back and say whether they accept the terms or not. We know that Hamas leaders did not participate in the last round of ceasefire talks that happened in Doha. We're not fully aware of the details about whether they'll be present in Egypt or not. But what we're waiting for essentially is to hear back from Hamas leaders on whether the deals that were called by Blinken a bridging agreement are going to get reached in Egypt by the end of this week or not.
Abir, thank you so much for the important update. Abir Abu Omar there. Now, this is a picture for markets, but also in the last 20 minutes or so, we found out that China is actually considering a new funding option for local governments to buy some of the unsold homes. This comes after there was a series of rescue packages that failed to prop up the market, and that's according to people familiar with the matter. All eyes on Jackson Hole, all eyes on what we could hear from Jay Powell on Friday. You can see European stocks gaining 0.2%. Coming up, defending his legacy, President Biden gives a passionate speech about his time in the White House. We'll have the latest from the Democrats' convention in Chicago. That's next, and this is Bloomberg.
Names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
Especially I'm afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see
see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Global stocks are headed for their longest winning streak for the year, with investors betting the Fed will soon signal it's ready to cut rates. U.S. President Joe Biden delivered an emotional and bittersweet call for Democrats to rally behind Kamala Harris at his party's national convention in Chicago. Plus, Israel has recovered the bodies of 6 male hostages who had been held up in the Gaza Strip. It comes as U.S. Secretary of State Antony Blinken heads to Egypt as he presses for a ceasefire deal between Israel and Hamas. So let's go back to politics and focus on day one of the Democratic National Convention, where outgoing U.S. President Joe Biden has defended his time in office. Now, in a passionate speech, he underlined the credentials of Kamala Harris to be his successor at the White House.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career. And she'll be a president our children can look up to. She'll be a president respected by world leaders because she already is. She'll be a president we can all be proud of. And she will be an historic president who puts her stamp on America's future.
Well, for more on all of this, let's bring in Bloomberg's Vonnie Quinn, who's been following this very closely for us and who's in Washington, D.C. Vonnie, I mean, it's a very difficult, balancing act. It's basically he wants to show that he's still in charge of Biden whilst passing the baton. So did he put this balance right?
He put to bed the emotional part of the speech quite early on, Francine. Right before he came on, we had a cavalcade of speakers that all became quite emotional. Chris Coons, for example, of Delaware, Joe Biden's home state, turning the "Let's Go Joe" into "We Love Joe," and that was a real moment in the hall where you could see that many of the almost 5,000 delegates were quite teary, and you saw Joe Biden walking up to the podium, hugging his daughter Ashley, who had introduced him, following Dr. Jill Biden, and as we see, wiping a tear from his eye, right? But he got up at the podium and he made sure to go into campaign mode, essentially. Very evocative language, talking about Charlottesville and the horror that happened there, and that being what made him want to run in the first place, to then listing essentially the achievements of his administration and tying Kamala Harris to each of those achievements. He said the legislation we passed delivered more to red states than blue. And when I say we, I mean Kamala and me. And he also talked about more Americans having health insurance, the smallest racial wealth gap in 20 years being created, and beating Big Pharma. And he said, guess who cast the tie-breaking vote? VP, soon-to-be President Kamala Harris. So really putting her up there in all of the achievements as a member of his team. He also, of course, tried to get ahead of some of the frailties that are perceived to be among her frailties, including the border issue. And obviously we're going to see Donald Trump on the Arizona-Mexico border on Thursday to try and draw some oxygen from that. He said that Trump had actually killed the strongest bipartisan border bill ever in the United States. And we know that Kamala is trying to bring that back. And there was a funny moment as well. You'll remember Infrastructure Week. He said that, Donald Trump had promised Infrastructure Week every week, whereas his administration had basically delivered an infrastructure decade.
Yeah, it'll be interesting actually to see what lands out of all of that. And Vonnie, we hear from the Obamas a little bit later today. The party will also hold a ceremonial roll call, and we're expecting a lot of influencers to show up today. What are you most looking forward to?
Yes, that roll call, it's being deemed now a celebratory roll call because, of course, they already had the virtual roll call, if you'll remember. And so all of this is celebratory. It's the first time that these delegates have been in person since pre-coronavirus, so 8 years since there has been an in-person DNC. And the momentum does seem to be continuing. There was a lot of emotion in the hall. The protesters outside, of course, are there as well. And the influencers, as you say, Francine, 200 of them, and many of them took to the stage tonight. This is still Monday night, my time, but to basically address the DNC. We've never seen that before. They got privileges, they got stage time, and they're tweeting and influencing, I guess is the term for it, as we speak. And obviously this is directly to the youth vote. It's a demographic that Kamala Harris desperately needs to get on her side. That and some other voters who have been perhaps turning slightly more red, including black male voters. We saw, almost 1 in 5 in swing states say that they were actually going to vote for Donald Trump this time around. And that's up from 8%, which is a huge increase, although it's still only 1 in 5. But the Harris campaign obviously is going to want to bring some of them back into that stall.
Vonnie, very quickly, and we were talking about this yesterday, actually, that on the Republican side, the Trump camp may be also trying out new tactics, less personal attacks, more policy. I mean, you mentioned there the youth vote. Are there any other either, demographics or people that the Biden or the Harris camp has to go for?
Definitely just swing state voters right now, right, Francine? Because we are seeing a bump in the polls for Harris. She has made up the Biden deficit. And in fact, if you take an average of polls, she is slightly ahead within the margin of error, not statistically significant, but slightly ahead of Donald Trump in some of the really key swing states. Even Pennsylvania is up for grabs right now, and we are still 10 weeks out. So the campaign does still have to make inroads into these states. Donald Trump, as you mentioned, has been traveling these swing states. This was not something that was on his agenda. It is now. He will be in Michigan tomorrow. He was in Pennsylvania today. And he's talking freely to everybody, including Bloomberg News. He was talking about the Federal Reserve and what he might do there. And when asked about housing, given Kamala Harris's promise to deliver $25,000 of a subsidy to those who are looking to get on the housing ladder, he said, well, we might do something about that as well. So it appears that everything is on the table for Donald Trump, as long as it pertains to something to do with Kamala Harris's policies. And we'll see more definitely to come during this week.
Vonnie, thank you so much. Vonnie Quinn there in Washington, joining us on the very latest, of course, of U.S. politics. Now, well, for more on this, Sarah Bufkin, who's assistant professor in political theory at the University of Birmingham, joins us. Professor, thank you for joining us. I mean, there's a lot going on, and I don't know whether, President Biden struck the right tone, and it was a lot about his legacy, but should he be out there just trying to get votes instead of kind of also reflect on his time in power?
I think the Democratic Party really saw the ways in which they needed to give Biden his final moment on the stage. I mean, when he received the presidential candidacy nomination in 2020, he did it during COVID. He didn't have the huge audience. He didn't have the balloons dropping from the ceiling after his speech with everyone roaring. And he's pursued this office for 40 years of his career. I mean, he's really dedicated his life to holding the office he now does. And I think that they knew that on the Monday of the convention, when they kind of wanted to signal the passing of the baton, they needed to give Biden both the ceremonial applause that his time in politics is due, and to let him celebrate the achievements of his administration. So I think much more of the case for a Kamala Harris presidency will be made starting today.
I mean, there's a lot of enthusiasm, right? Especially some of this grassroots enthusiasm with the Harris-Walz tickets. Can they keep it going until November 5th?
Yeah, I mean, that'll be the real question. I mean, what we've already seen so far is that there's been, many of the policies that the Biden team was running on, Kamala Harris's team is now running on. So there hasn't been a huge shift in the policy, but there's been a big shift in the messaging, and in particular the affect, the kind of collective emotional energy that is being mobilized here. And so where Biden really ran on a kind of affect of fear, right, that we have to defend democracy, that we have to look at January 6th and say, never again can we let something like this happen. Kamala Harris has taken a lesson from Barack Obama in 2008 and is running less out of fear and from a defensive posture and more from joy and a sense of hope about the future. And I think that's really been picked up by the grassroots. Democrats are ready to be excited about someone again, to not be in a defensive crouch against Trump, but to really put forward their own positive vision for what an economy that works for everyone could look like.
And so how does that play in the polls? And also her pick for vice president, Tim Walz, seems to be doing really well in the polls.
It does. And I think already, it's, the news cycles pass so fast in politics, but so far Tim Walz is playing much better as a VP pick than J.D. Vance is. And I think in many respects, it seems like Kamala Harris in part made the decision based on personal rapport between her and Tim Walz, but he is very much an attempt to reach out to rural and suburban voters, particularly in those Midwestern swing states. He's the governor of Minnesota. He's very well known in Wisconsin. And he speaks to a lot of the communities that, because of his personal narrative, his background, and his policies and his style of speech, that Kamala Harris needs to win.
But can he win Pennsylvania for her?
Well, let's see. They're campaigning, and they're going for the rural areas, right? I think that it's a much more aggressive campaign footprint than you saw under the Biden administration. The on-the-ground game has really been amped up, and that's part of what happens when you have a youthful candidate, right, is that you can put them in a bus and send them around to gas stations and small rallies over and over and over again to get them out meeting people.
How important, so we have Tim Walz's speech on Wednesday, and then we have Kamala Harris's speech. What's the most important one? I feel like we haven't really heard from Harris in a way where we actually say this is 100% the policies that she locked down.
Yeah, and I'm not sure exactly how much policy we are going to get from Kamala Harris on Thursday, but I do think that speech is the most important one. Tim Walz needs to introduce himself to the American people. He needs to, I don't want to say bring the vibes, but he's one of the best sort of attackers of Trump and the Trump campaign. We've seen that with the ways in which he started all these memes around these guys being just weird. And I think he can bring a lot of energy and a lot of attack. And then Kamala has to get up and show herself to be the future of the Democratic Party. This is going to be her biggest stage. So,
and then there's a debate, September 10th. It's unclear, actually, in my mind, who wins this, because she's a prosecutor. Trump is very good at taking people down, but he hasn't had that much time to assassinate her character.
Yeah, I think that she is certainly going to have a sterner spine in a debate, and it won't be cowed as easily. She's been through tough cross-examinations. She's done the Senate hearings, but Trump is a wild card, right? We remember him from the debates with Hillary Clinton when he just kind of stalked her around the stage and loomed over her and just cowed her with his physical presence. Hopefully that won't be something we'll see on September 10th, but it certainly seems like the field is much more open in those debates than it would be between more conventional candidates.
Are the Republicans and Donald Trump changing tactics?
I think they're trying to pivot, certainly. Whether or not Donald Trump actually follows the new playbook is always the real question. The man doesn't like to stay on script. But certainly you can see from the campaign and from their ad buys that what they're trying to do is to run the Kamala Harris of 2024 against the Kamala Harris of 2020 Democratic primary. So they're going back to the tape, the audio, where she took further leftist positions and trying to paint her as a kind of far-left lunatic or Marxist in some sorts. I'm not really sure Donald Trump knows what Marxism is. But really trying to tar and feather with a lot of the buzzwords that Republicans are very concerned by pulling up this old footage and showing it out. So we'll see whether or not those attacks actually land. In many respects, I think that the centrists that the Republicans are trying to convince, they'll be able to hear the other side.
Is it impossible to say whether he regrets his pick of VP? And if he does, can he change it?
I don't know if he regrets his choice. I think Republicans in the party regret his choice of VP. Yeah. J.D. Vance was very much the pick of someone who felt strong, who felt like they didn't need to reach into the center at all, who was very convinced of basically his victory after the assassination attempt in Pennsylvania. Trump doesn't like to admit he's wrong. So in some respects, I think what you'll see is probably a doubling down, and I doubt that J.D. Vance will be off the ticket at this point. If anything, what you'll see is the Republican Party tries to kind of sideline him and marginalize his public presence.
A lot of the press is basically saying, because the Democrats have been so energized that, Donald Trump is getting, I guess, more desperate in his tactics. I mean, we've kind of learned not to underestimate him. So do you trust the polls? Can they change? Is it going to be extremely hard for either party to win?
I think it's a neck and neck race right now. I mean, what's so exciting for Democrats is the fact that Biden was running sort of about 2 to 3 points behind Trump for the last 6, 7, 8 months. And that gap has closed, but it's still very much a neck and neck race between Kamala Harris and Trump. There's a lot of weeks ahead of us before November 5th, and we certainly could see the polls shift in many ways. The promising news for Democrats at this stage is that normally candidates get a post-convention bump in the polls, and Trump certainly would have been expecting that, but Biden's decision to step aside and Kamala Harris's quick consolidation in the Democratic Party really removed that bump. So we'll see what happens after the Democratic National Convention. I mean, the Democrats are very much trying to show party unity and enthusiasm this week. But the debates could throw things, and honestly, on-the-ground campaigning really shouldn't be overlooked.
Sarah Bufkin, thank you so much for joining us. Assistant Professor in Political Theory at the University of Birmingham. Coming up, Volodymyr Zelensky urges Ukraine's allies to lift restrictions on the use of their weapons to strike inside Russia. We'll have the latest on geopolitics. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Ukraine's Volodymyr Zelensky has urged allies to lift restrictions on the use of their weapons to strike inside Russia. Now, it comes as Kyiv continues its two-week incursion into the Kursk region. Now, for more on all of this, let's bring in Bloomberg's Tony Halpin. Tony, thank you for joining us. So what are the latest developments in Ukraine's incursion into Russia?
Hello, Francine. Well, Volodymyr Zelensky was in pretty bullish mood when he was talking to Ukrainian diplomats yesterday. He said that essentially Ukrainian forces control close to 500 square miles inside Russia, that they're continuing to expand their presence there. And he was very much making the case that this vindicated his argument that Ukraine's allies should remove any restrictions on these long-range weapons because, as he put it, the red lines that Russia kept arguing would be the response were in fact illusory, and that there was no real response from President Putin to justify caution on the part of Ukraine's allies in allowing it to use the weapons as it sees fit.
So, Tony, why is President Zelensky pressing allies for long-range weapons?
Well, I think it's a debate that's raging now within Europe, certainly, and probably with the US as well, that the argument has always been that they don't want to provoke an escalation from President Vladimir Putin in Russia, potentially even a nuclear response, because of crossing the perceived red lines about entering Russian territory, for example. And Zelensky was making the case that this was the reddest of red lines, that no one had actually crossed into Russia in close to 80 years, and that the response had been shown, in his words, to be illusory, and that therefore the concerns of Ukraine's allies aren't really justified, and that his argument that it will allow Ukraine to speed up a resolution of this war by attacking Russian airfields and military bases where they strike Ukrainian cities, that would be strengthened by the fact that he's shown these lines to be illusory.
So, but what's the likelihood of that happening, given all the concerns around it?
Well, I think there'll still be a great deal of caution among European allies, certainly, and I think in the US too. They have always argued that they need to help Ukraine defend itself. It becomes a bit more of a grey area in terms of helping Ukraine win the war, because there's arguments about what that actually means in terms of taking the fight to Vladimir Putin inside Russia.
Tony, thank you so much for the briefing. Tony Halpin there with the very latest on Ukraine and Russia. Coming up, the Chancellor, Olaf Scholz, German Chancellor Olaf Scholz, heads to Germany's new $11 billion semiconductor project. So we'll have more on the European chip story. That's next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Welcome back, everyone. Bloomberg has learned that Edgar Bronfman, heir to the Seagram Spirits empire, has made a bid worth $4.3 billion to take control of Paramount Global. Now, the parent company of CBS and MTV has already accepted an offer from Skydance, led by David Ellison, the son of Oracle co-founder Larry Ellison. The agreement with Skydance includes a 45-day period during which Paramount can review other offers. And AMD shares surged in New York after the company announced it's buying server maker ZT Systems. Now, the cash and stock transaction values the deal at nearly $5 billion. ZT has extensive experience making server computers for owners of large data centers. Now, the takeover boosts AMD's efforts to challenge NVIDIA, which has been the runaway leader in the market. Now, the German Chancellor Olaf Scholz is visiting the site of a new $11 billion semiconductor plant in eastern Germany. The facility, which will be 70% owned by TSMC in partnership with several European chip makers. Now, let's get all of the details from Bloomberg's Oliver Crook in Berlin. Good morning, Ollie. So how big is this project, and why did it end up in Germany?
Yeah, Francine, this is really a big deal for the Germans because they've been trying to attract a lot of these semiconductor manufacturers within Germany. And you know, TSMC is really very different than some of the ones that they already have. So they already have Infineon, a German company. It went to one of their groundbreakings, last year, but they were doing memory chips. TSMC is very attractive because it does some of the most sophisticated, most important semiconductors from across the world. So this is a 10 billion euro project. There's going to be some other stakeholders, including Infineon, Bosch, and some of the other European companies. Each of them will hold 10%, but TSMC is really driving this. They own 70% of it, and what's interesting is of that 10 billion euros that it costs to do this, 5 billion is coming from the German government in a direct subsidy, so significant. For TSMC, it's part of its bigger plan. It's opened a fab for the first time in Japan. They're throwing a ton of money in Arizona in the United States, and this is really their first footprint ever in Europe, so significant that they've chosen Germany. And for the EU, because Ursula von der Leyen is going to be there today to sort of break ground here with them, EU wants to do 20% of global chip production in the world. If they're going to hit that figure, or even frankly a fraction of it in the next 5 years, they need more projects like this.
So, Ollie, put this in context of the global chip race. Where does Germany sit right now, and where does it want to be?
Yeah, so Francine, listen, all of the wealth that has been generated in Germany over the last 20, 30 years has been from owning industries that are basically slowly waning and are not sort of very innovative in terms of where their place in the modern world. What they want to do with this is try to attract some of those future-facing industries like the chip industry within Germany, and so they've done that. They've cultivated it in what they call Silicon Saxony in Dresden. So they've thrown a ton of money at this, 5 billion to TSMC, 10 billion to Intel, to really build that ecosystem, because they need a lot of companies building this stuff for the auto sector and industry, but they also need to attract the labor force so that you have people that can actually do these really complicated jobs here in Germany, and this is their endeavor to do that, and they're throwing billions and billions of dollars at it to try to get it to happen.
Ollie, thanks so much. Oliver Crook there with the very latest from Berlin. Now let's take a quick look at some of the events we're following today. 10 a.m. UK time, Euro area CPI data. 12 p.m. we have Turkish Central Bank rate decision, and that's before the U.S. market open. Lowe's earnings, and then, of course, it's the Democratic National Convention, day 2. And then we have a number of Fed speakers, including Raphael Bostic and Mr. Barr. Up next, Bloomberg Brief, Danny Berger, Manus Cranny in New York, and this is Bloomberg.
First of all, global trade, which had adverse consequences, that we're learning about to this day still unleashed an enormous amount of gain for humanity. And with the rise of global trade became the rise of information sharing around the world, which rapidly accelerated the trajectory of mankind. I mean, of note, the Chinese, for example, are leaders in solar. They're leaders in EVs. They're leaders in a number of emerging technologies. In a world which is more splintered, we'll see the gains that the Chinese have achieved in these important areas not shared by the Western countries. And conversely, the United States is a clear leader in AI, along with a number of the European countries. And those gains will not be shared with China and the countries in its sphere of influence. So it's a very clear-cut loss for all of humanity when we have the severing of ties between our countries.
On a practical level, is it getting harder to manage the risks you face?
I think that one has to be aware that there are more tail risks that are harder to ultimately manage.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Good morning from our global headquarters in New York. I'm Menace Granny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
The global stock rally propels higher. Soft landing narrative drives momentum into the countdown to Jackson Hole. Passing the torch, President Biden kicks off the Democratic National Convention, endorsing VP Harris. Republican nominee Trump focuses on his economic vision. And a message to Hamas, say yes to the ceasefire deal. Secretary Blinken travels onward to Egypt. Good morning, Manus.
Danny, good morning. Day 8 of the U.S. equity rally, $3 trillion added. Globally, we're in for day 9 of an equity rally. So there is no buyer's remorse on the dip whatsoever. Goldman Sachs say the pain trade is actually for higher stocks. If you're not on this juggernaut, according to Rubner and the team over there, you're on a losing trade. They indeed put a line in the sand. They said the end of August, you're going to get these buybacks, and that's going to propel us higher. I like what Laurie Calvasina had to say yesterday on surveillance. Proceed cautiously, but proceed and with caution. In other words, it's a double lock. The oil market, by the way, NVIDIA, never far from our minds or our hearts, down 0.6%. But that's a break of trend. 6 days of when it added 24% in value. It breathes this morning. The oil market gives 0.6% back. Couple of things here. A, there's narrative around a ceasefire from Blinken telling Hamas accept the deal. And the bearish dominance. You're looking at China's oil demand falling 8% in July. A 9% drop in steel production this year. The narrative around China is building to the downside. Bonds, the risk is you get a hawkish lean. That's the tail risk from Jackson Hole, that there's a hawkish lean from Powell, a less aggressive cutting cycle than the market has currently priced in. Bank of America says you want to trade 350 on the downside, 425 on the upside. So it's that kind of bandwidth with a lean to the long. Danny, good morning.
Good morning, Manus. And to be fair, we have had some of the hawks finally capitulate. One of the most recent one was Cash Curry yesterday morning, saying that the time is appropriate to cut. But even within that was a reason not to buy bonds, Manus. He goes on to say that I'll probably in the camp of, hey, let's take a more measured approach because we don't know where our destination is going to be. We keep hearing this of Fed policymakers saying, it looks like now is the time to cut, but we need to be judicious and measured in that approach.
And if you put those two together, one is a pivot by Kashkari, but then daily talking about a gradualist approach. So I think that this is where the tail risk, as we go towards, this is what I said to you yesterday, the tail risk is a slightly more hawkish cut than perhaps the narrative that we've been hoping for. Pop the earpiece back in, and we will all be able to hear. We'll all be able to hear what's going on in just a moment.
I like this. You're like, I'm done with Fed speak. I don't want to hear any more of this. No, but it is this weird thing, right, where you still have more than 25 basis points priced into the bond market. So the question can still be asked, are equities and bonds saying something different? That there still is this momentum in bond markets that maybe we'll get 50 basis points of cut somewhere. Whereas equities went from growth scare to growth euphoria. Exactly. We're what, 1% away from all-time highs?
Yeah, I mean, and plus you're at all-time high on the equal weight,
Right,
and that's the other thing just to bear in mind.
There's so much breadth.
There is so much breadth. The one final thought I put is this: it was a great conversation. It was the ADP chief economist, and she said, "Look, put the brakes on the fear mongering. Define what is normal. Define what is normal, our new normal in a post-COVID world where you're going to cut rates. Where is the new neutral rate? What do we need to wrap our hands around in terms of an unemployment rate that is more natural?"
Yeah, but of course, recession, no recession. It's binary, and you get
session,
a market.
no session.
There is indeed a session, I promise you.
We're
A
on
market
it.
session, 8:30 a.m. this
Earpiece
morning. In the
is in.
meantime, it is 5 a.m. We're getting through these markets, but we also have politics to cover. Over in Chicago, the Democratic National Convention kicked off with President Biden touting Vice President Kamala Harris, calling his party to rally behind her.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career. But she'll be a president our children can look up to. She'll be a president respected by world leaders because she already is. She'll be a president we can all be proud of. And she will be a historic president who puts her stamp on America's future.
Meanwhile, Republican nominee Donald Trump takes a jab at his opponent, saying her plan to aid first-time home buyers is, quote, a big mistake, but then, of course, said that he himself would be interested in supporting home buyers as well. Joining us now is Bloomberg's Vonnie Quinn, who joins us from Washington, D.C. So, Vonnie, day one of the DNC, what were the takeaways?
Well, it was electrifying, really, for those in the audience. Danny, I must say there was a cavalcade of speakers before Joe Biden, from Dr. Jill Biden to his daughter Ashley to senators from his home state, Chris Coons, Raphael Warnock, Hillary Clinton made comments, and they were all basically getting more and more emotional as the night went on and thanking Joe Biden. Chris Coons, for example, turning that famous "Let's Go Joe" slogan into "We love Joe" and "Thank you, Joe," and the whole audience and the whole DNC delegates sort of took up this chant. Then Biden came to the stage and you saw him dabbing some tears away, and he did allow himself some emotional moments and some comments. You know, I love the job, but I love my country more, for example. And he ended with, "America, I gave my best to you." But he did get very quickly into the pragmatic campaigning Joe Biden, and that's what you heard there, where he drew Kamala Harris's presence to all of the positive things that his administration had achieved.
Go after the undecided, even if it takes a little bit of tears to get you there. Vonnie, good to see you. Tell me this, what did we learn from the Trump campaign? I mean, I like what Danny said, which is Kamala Harris is talking about $25,000 for first-time buyers, etc., which was lambasted by Trump. But then, of course, as she said, you know, he's thinking about it himself. What did we learn yesterday from the Trump campaign?
I think we learned that nothing is off the table, right, Manus, particularly when it comes to anything that Kamala Harris has actually suggested might happen. He lambasted that prospect. He said that, you know, most people say it would be inflationary and it would actually cause housing to have problems among first-time home buyers. But then when we asked him, Bloomberg News asked him, well, would he consider helping those who want to get on the housing ladder? He said, yeah, I might do that. He didn't specify how. So, you know, we are looking for details from these candidates, from, you know, Kamala Harris to Donald Trump, on what exactly their plans would be. It doesn't appear that Donald Trump has many plans regarding the housing market yet, or regarding the Fed, except that he likes to talk to Fed chairs. He said that he had jawboned, was the way he put it, with Fed Chair Jerome Powell, and we know that he doesn't want Jerome Powell to serve another term as Fed Chair when his current term runs out in 2026. But when we asked him who would he like in that position, he also said, well, it's way too early to say. So he's equivocating to some extent and maybe pausing for time. But we are going to hear more because he is talking to anybody and everybody, giving news conferences, interviews, and obviously he will be in Michigan later today. He's going to North Carolina as well, and he'll finish on Thursday in Arizona, all critical swing states.
Well, to quote the former president himself, apparently he has a better instinct in many cases than people at the Federal Reserve or the chairman. Bonnie, good to see you. Bonnie Quinn, keeping the lights on in Washington overnight. Lindsay Newman of G0 Media weighs in on the election race, writing this. Harris now leads Trump in a head-to-head polling across a number of key swing states. In the latest polling, she is now more trusted to handle the economy than Trump. The first time Democrats have led on this key metric throughout the 2024 campaign. Lindsay joins us now. Lindsay, good to see you. So the narrative is this: it's prescription caps, it's money for first-time buyers, etc. It's playing very much to the middle class. The question would be, the accusation back is this is interventionist economic policy. I just wonder, do these kind of policy narratives embolden her in the swing states?
Thanks for having me on again. Since the last time I was on, nearly 1 month has passed since Harris has entered this race, and she continues to outperform expectations. If we think back to earlier this summer, even just a month ago, the real narrative that Democrats were facing was, would President Biden step out of the race? If so, who would step in? And if it was Vice President Kamala Harris, would she be able to be that torchbearer for Biden after pretty middling favorability ratings herself for many, many years? And now, as the Democratic National Convention gets underway, Bonnie said it was electrifying in the audience there. Democrats have really turned the page, and it's showing, as you say, as you reflect in that quote that I have, for Kamala Harris in head-to-head polling, in swing state polling on this all-important issue. She laid out her economic plan last Friday, where she talked about an opportunity economy. We hear this morning she's talking about 28% corporate tax rates. But the messaging is breaking through, the messaging of looking to the future, moving forward. And we see that in fundraising halls. And we see that overnight at the DNC. And the DNC will continue to be a big test for her and her campaign. Conventions tend to be energizing, electrifying moments. But it will be a real glimpse into whether Harris can hold together the party around these fault line issues like Israel-Gaza, and whether she can finish strong over the last couple of months in the way that she has started this campaign.
Still, though, I mean, one of the things I was maybe telling was they were 30 minutes delayed, and officials said that it was because of the raucous applause that they had to delay by 30 minutes. So that might be telling of what the atmosphere was there. But Lindsay, as she lays out more policy and fills in the gaps, it does leave her more vulnerable to criticism. And we have seen that in the various economic policies laid out, from housing to price gouging and now increasing the corporate tax. What do you make of the rollout of policy and the details that she is giving or isn't giving?
What's really interesting about that, Danny, so the Democrats, as is standard practice, they released their party platform on Sunday, and they did not update the party platform for the change in leadership at the top of the ticket, right? This is a party platform that they released that had been approved on July 16th before Biden stepped out of the race. So what this tells us, really, it lays bare something fundamental about what's going on here in this campaign. This is about the energy that Harris has brought to the campaign, but this is not really it's not yet clear that this is the Harris Democrats, right? Like the Reagan Republicans. This is about something bigger. This is about Democrats having their eye on ambitions for November of defeating Trump at all costs. And we will, of course, see Kamala lay out policy as we did last Friday. We have to expect more of that with the debates coming up, with more of the direct, she's going to be in more direct contravention, in more direct interaction with Trump over the last couple of months post-Labor Day. But this is really about atmospherics for the Democrats, about turning the page, moving forward. And we're seeing a very different tone than what we saw. We even saw a glimpse of it last night in Biden's speech, where he essentially gave the convention speech he would have given if he was accepting the nomination, highlighting his greatest hits and also talking about the threats to democracy. That's not what we're hearing from Harris and her campaign.
Let's just reflect back on something that Danny touched on, the corporate tax policy. This is just one piece of what one could say is quite a tight piece of policy. She's backing the continuation of a narrative from Biden, which is to raise corporation tax to 28%, more than the United Kingdom, and that's saying something. Trump has flown the kite that he'd like to get it to 15%, and obviously reduce taxes in the previous administration. How, where does that 28% mandate win? Where does that win her votes?
Yeah, Manus, I think it's earpiece day over here as well. What I would say is, it's an interesting piece of news that she's decided to come out today and back Biden's policy decision to do 28% when we see, as you say, that Trump is moving in the opposite direction. This is a very significant point of policy differentiation that she is apparently comfortable with backing. And, we will see whether it turns out to be a decision that gains her that wider umbrella of votes that she needs, casting a wider net over the Democratic Party that she needs, because she is focusing in on this narrative of honing in on supporting the middle class, making sure housing, making sure college is more affordable, making sure those pocketbook issues really are heard for the middle class, and trying to differentiate with President Trump, who is focusing in on the corporates and the wealthy individuals.
Hey, Lindsay, we really appreciate your time this morning. Lindsay Newman of G0 Media, subsidiary of Eurasia Group. Thank you so much. Okay, Manus, let's get to some of the other top trending stories on the terminal this morning. Apple will make its most expensive iPhone Pro and Pro Max models in India for the first time this year. Its key manufacturing partner in Asia, Foxconn, will begin assembling the devices within weeks of their global launch this fall.
Residential units around Beijing and Shenzhen have been cut in price by around 20 to 30% in recent months. That's thanks to local governments in China dialing back on intervention, causing a race for cash among developers and spreading a price war across China's new home market.
Health authorities are concerned that Mpox may be spreading before people show any symptoms. The typically milder cousin of smallpox has started to spread much more quickly than it used to. There are about 18,000 recorded cases now.
Coming up on the show, the U.S. Secretary of State Antony Blinken heads to Egypt and Qatar for the next steps in the ceasefire discussions.
And later in this hour, good news is good news again. We're going to catch up with Catherine Rooney Vera from StoneX as the equity winning streak continues as we approach the equity market session.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. This week, Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance August 23rd at 9 a.m.
It's still in play, but you can't predict what it's going to do. So far, Israel says they can work it out, they're prepared, but I was told Hamas is now backing off. It remains to be seen. It's going to keep pushing.
President Biden speaking to reporters in Chicago on the status of the Israel-Hamas ceasefire talks. U.S. Secretary of State Anthony Blinken now heads to Egypt and Qatar. Joining us now is Bloomberg's Paul Wallace. Paul, the headline we got out of this was Netanyahu has accepted a ceasefire deal, and now Blinken is saying it's up to Hamas to say yes. What do we actually understand about this ceasefire deal and how close we might be to it?
Hi, Danny. The Americans are certainly sounding more optimistic in public. And what they said is that Netanyahu has agreed not to a deal specifically, but to a proposal. It's a little bit unclear whether the Americans are talking about something they put forward back in May or something that's new in the past few days. But either way, they and the Israelis are now putting the onus on Hamas and saying it's up to Hamas to say yes or no to an agreement that would see fighting at least paused, if not permanently ended, and hostages released, as well as Palestinian prisoners from Israeli jails. However, there is still a lot of skepticism within both Israel and among people who watch Hamas closely, a skepticism that the sides have managed to bridge their divides, and some of the key issues are the same issues that have dogged these talks for months now. Hamas wants the war to be over whenever there's a ceasefire agreed to. Israel insists that a ceasefire is just that by definition, and that it can continue the war if and when it chooses, because it's intent on destroying Hamas as a military and governing organization. There are also details that still need to be hashed out, like how many hostages are released in the first phase of any ceasefire. So they're definitely still sticking points.
Well, let's just talk a little bit more about that, Paul. Good morning to you. Blinken talks about a fierce urgency in progressing towards a truce and a hostage release. And there are a number of major sticking points. One is about the corridors and whether Israel sustains and maintains troops in some of these more technical corridors bridging into Egypt, North and South Gaza. But there's also, you know, what it is that Israel wants. They want the ability to call time on this ceasefire and restart, let's say, a conflict if they feel that they want to finish Hamas off. And this is perhaps one of the biggest stumbling blocks, as we understand.
Exactly. For all that Hamas has been hammered by Israel since it began its air and ground offensive after October the 7th, the group still has, by Israeli estimates, thousands of fighters in the Gaza Strip, and they're still able to mount attacks on Israeli troops in Israel itself.
Okay, Paul, thank you so much for keeping us appraised. Paul Wallace, tracking Anthony Blinken's next steps across the Middle East towards a ceasefire deal. Coming up, a look at the other main headlines from around the world, including the missing passengers of a super yacht off the coast of Sicily. Context matters on Bloomberg.
Do you think it'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term. And David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of the math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we're able to apply.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
It is Bloomberg Brief, reunited Manus Granny and Danny Berger in New York. Front pages, and these are some of the headlines from around the world. We'll kick off with a pretty tragic story. The UK tech tycoon Mike Lynch is missing after the yacht sinks off Sicilian coast. One person confirmed dead. Lynch, once referred to as the British Bill Gates, and Morgan Stanley International Chair Jonathan Bloomer are among 6 people missing.
Really terrifying story. Okay, next up, the Financial Times has this on their front pages, that U.S. regulators are likely to challenge Couche-Tard's proposed takeover of 7-Eleven. The concern is basically that a deal would increase prices for consumers. We've heard this political message for some time, and damage the labor market. There have been similar snags, as we know, between the deal of Kroger and Albertsons that the FTC is looking to block.
And finally, the Journal. Well, everybody's got it, but we'll go with the Journal. Bronfman makes a $4.3 billion bid for the control of Paramount Global. You thought this story had gone to bed. No, it hasn't. It's back $1.75 billion for Sherry Redstone's National Amusements. Further investment in Paramount, including $1.5 billion to reduce the debt. I love this story. It's just like every week you get another. You don't.
I thought it would go. I thought it was done. I thought we were done with it. And it just like
over.
Rises back from the grave.
This is Succession. This is actually Succession live. On a slightly more serious note, it's what does Bronfman offer to Sherry Redstone? What's he got to do to convince her to really rip up the script with the Ellison family, and what's he going to put into the company?
Well, the Paramount shareholders might like it better because it doesn't dilute them as much. Yep. But you do have a pretty sweet offer from Skydance. They have very deep pockets, and they also have a $400 million breakup fee that Bronfman would need to pay.
Which he says he'll include the $400 million, as you do, $400 million to cover the breakup deal with a rival. Sweet deal.
I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And, you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger alongside Manus Cranny. Let's set your agenda.
That global stock rally propels higher as a soft landing narrative for the U.S. drives momentum in the countdown to Jackson Hole. Passing the torch, President Biden kicks off the Democratic National Convention endorsing VP Harris. Republican nominee Trump focuses on his economic vision. And a message to Hamas. Say yes to the ceasefire deal. Secretary Blinken travels onward to Egypt to build a coalition of the willing. Danny, good morning. There is no buyer's remorse in that stock market.
There isn't, and it's just remarkable the breadth that we're seeing in terms of this rally. The equal-weighted S&P 500 hit an all-time new high yesterday. Everything from big tech to small caps joined in the rally. So far, we are on track to have a 9th day of a rally. If we're able to do that, that's the longest winning streak for U.S. equities since 2004. Just to give you an idea of the momentum behind it, the bond market, on the other hand, is not going anywhere this morning. Your 10-year yield at 3.86%. We did have some flattening yesterday because the hawks are capitulating, Kashkari being the most recent of them, saying maybe it is time to cut. He most recently said that he would wait until the end of the year. But the important thing is they're talking about a gradual approach. Kashkari certainly is, Daly certainly is. So that's why we got some of the flattening in the 2-year yield coming in yesterday. Meanwhile, Brent crude holds on to its losses of yesterday. It was down some nearly 2.5%, down 0.5% this morning, $77.20 barrels a cent. Manus, you talked about the economic reasons behind this in China. And of course, it's also geopolitical with Blinken telling Hamas to accept a ceasefire deal, that Israel has accepted a proposal for a ceasefire deal.
Yeah, I mean, those commodities have all been shaken over the past couple of weeks, Danny, as the equity market, volatility in the equity market plummeting from that, you know, that moment of, some say, fantasy at 65 on the VIX back to, I'm just looking at it this morning, sub 15. So the equity market is telling you soft landing anonymous. The bond market, I still say the bond market, the proclivity in the bond market is to err on the side of lower yield for a whole host of reasons. Disinflation, geopolitics, and those are the two alphas. And still, you've got various people saying trade, you know, 350 to 425, but from the long side.
But there still is this remarkable nature to a 10-year yield that's still below 4%. Below 4%, despite the fact the economy is not falling off a cliff, and we have deficits to worry about next year. Perhaps some of that will be assuaged by Kamala Harris proposing a higher corporate tax. I'm not quite certain about that and how certain people are taking some of her proposals, whether they're serious or not. But there is still that deficit overhanging, and we don't yet care about it. And again, it's a 10-year yield below 4% still.
Neither of those candidates at the moment care to deal with the narrative around the deficit, but it may be the bond market that comes back to slap them, whoever is in that White House, in terms of the narrative. I like what the ADP chief economist said yesterday, Neela Richardson. Put the brakes on all this fear-mongering as you go towards Jackson Hole. Define what the new economy is and what the new normal is.
Yeah, I think it's clear that the short volatility event, at least for now, has gone away. But this is the thing, we're kind of searching for the new normal. We're searching through the trend. And you tend to get a lot of whipsawing as you do there. But right now, that chop is only one way, and it is upwards.
Yep, I think Mary Daly sets the table very well about what gradualism is. I think it's a word that we're going to hear a little bit more of in this narrative from Jackson Hole. Politics, it's one of the reasons why this bond market is under 4%, as you say. In Chicago, the Democratic National Convention kicked off with President Biden touting Vice President Kamala Harris, calling his party to rally behind her.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career. And she'll be a president our children can look up to. She'll be a president respected by world leaders because she already is. She'll be a president we can all be proud of. And she will be a historic president who puts her stamp on America's future.
Meanwhile, the Republican nominee Donald Trump takes a jab at his opponent, saying her plan to aid first-time home buyers is, quote, a big mistake. Vonnie Quinn is with us from Washington. Vonnie, good to see you. I mean, we've touched on this, which is, you know, lambasting or lampooning Harris's campaign for money for first-time buyers, and then, yeah, that's something that he might think about. So talk us through this pomp, this ceremony. I'm looking at the DNC website this morning. I'm not seeing a policy tab yet. I'm hopeful.
Well, Manus, they have other things on their mind right now, this week at least anyway. They just want to get the excitement going, to keep the excitement that you saw in the DNC theater tonight, to keep that going throughout the week and to get this bump in the polls that you typically see, at least since the year 2000 for Democrats, at least 2.1 percentage points, to maybe make hay while the sun shines, if you like. And tonight was the kickoff of that. I say tonight, it was Monday night. It was the culmination of all of the speakers with then the president, Joe Biden. He gave a very something for everybody type speech. It was emotional at the beginning. It was emotive. He talked about the administration's positives. He tied Kamala Harris to everything good that had come from this particular administration. He also attacked Donald Trump in, you know, very vociferous ways. He said that he had absolutely killed the border bill. It was a bipartisan border bill. In that sense, he was getting ahead of some criticisms that Kamala Harris is bound to see over the next 10 weeks and has already been seeing. And of course, he also gave a little bit of nostalgia type talk to all of those supporters in the audience who were basically helpless. They were shouting, "We love Joe," and "Thank you, Joe," in place of the "Let's go, Joe" that had been the campaign slogan from 4 years ago. He said to them and to the world, you know, America, I gave you everything. And, you know, he also had the line, "I love my job, but I love my country more." And that was essentially the theme of night one, which was we the people. Protecting democracy was one of the pillars of what Joe Biden had to say tonight.
Bonnie, typically when you have a national convention from either party, the opposition party doesn't do a lot. They don't do a lot of media because the thought is that there'll be so much focus on the convention that it hoovers up all the air in the room. That hasn't been the tactic of the Trump campaign, going to various swing states, doing events. What does counter-programming look like right now from the Trump campaign?
Frenetic, I would say, Danny, and you know the style of campaigning that you talk about, well, it seems to be old style campaigning at this point. You know, on the Republican side, you have Donald Trump going to swing states, talking to reporters, giving news conferences, trying to get in everybody's face in order to take some of the oxygen from the Democrats. On the Democrat side, you also have some novelty instances. For example, you have 200 influencers invited and given stage time, some of them, and also given studios and any kind of tools they need to work with in order to get the message out to the young vote. So very different kind of an election this time around than we've seen in the past. But you mentioned the counter-programming in Michigan, Donald Trump will give a campaign Tuesday, another key swing state. And then Wednesday is going to be in North Carolina, where Kamala Harris, according to the latest polls, has a slight edge, as she does in several swing states at the moment. Not statistically important, but directionally very important for the Democrats. And then he'll be in Arizona Thursday. So there's going to be a lot of counter-programming and a lot of rhetoric as well. You mentioned earlier, Manas, about his conversation with our Bloomberg News staff about housing and how, you know, he was lampooning Kamala Harris's $25,000 subsidy for first-time home buyers and saying that, you know, nobody thinks that's a good idea, even economists. Well, at the same time, he said that he might be open to something like that when pressed by Bloomberg News. He also talked about jawboning with the Federal Reserve chair previously and said, there's nothing wrong with that. He doesn't have to take my advice. But as Danny pointed out earlier, he did say he does have particularly good instincts when it comes to monetary policy.
Hey, Vonnie, we really appreciate your time this morning. That is Bloomberg's Vonnie Quinn in Washington. If you're just joining us this morning, futures are pointing higher. It would be the 9th consecutive day of rallying for the S&P 500 if it can do it, the longest winning streak since 2005. Joining us now to talk markets is Catherine Roney Vera, Chief Market Strategist at StoneX. Catherine, really great to see you this morning. So not only has the rally continued, equal-weighted S&P 500 also just hit an all-time high yesterday. Has anything changed since last 2 weeks ago, little mini crisis? Is something different, or are we right back to where we were?
Not much changed, Danny, during the market meltdown. We saw a labor market come out a little softer, and not much has changed since the market rebounded and really melted up since then. What has changed? Nothing. So I think that tells us a couple things. One, the markets are highly levered to whatever economic data comes out. So we're all attuned to every ECO, high frequency data, that comes out at 8:30 or at 10 o'clock. And I think that's important for the markets to take into consideration, that volatility is pervasive and it's going to remain. And volatility isn't just to the downside, it's also to the upside. So I think it makes sense in times of market surging to protect those positions. That's something I've been saying for an extended period of time. And I think it makes sense now when the VIX has collapsed back down to sub 15. Going into the end of the year, we see a lot of events that could be moving the markets, including elections and ECO data. And I really think that that gold is going to continue to perform very well. I still like equally weighted S&P. It's been one of my top performing calls this year. But I do think it makes sense to put on protective hedges.
Catherine, just on that note, good morning to you. Yeah, you're right. Gold's had a cracking run, 2005. I knew that trade would come good one day. Long time ago.
All that gold under your bed, man.
Stacked under the bed. That's why the bed is raised up. On a slightly more serious note, we've got 10-year government bond yields at 3.87 this morning. And this is what Danny and I were chatting about, is the equity market is flying higher. There's the elixir of life in the equity market of a soft landing and margins and earnings that are supportive. But the bond market is telling us something different at 387. It's sub 4%. The bond market is more worried about the landing than the equity market, isn't it?
Well, that's exactly the case. And the truth is, when you look at the past 7 episodes over the recent decades, when the Fed does start to cut rates, that's when the rubber hits the road. That's when we see how the strength of the economy is. In the ensuing 12 months after the first Fed cut, 43%, according to our StoneX estimates, of those 7 episodes over monetary policy history, we've seen recession ensue. That's not a small percentage. So I do think that that investors should be contemplating the possibility that we could see a rollover in the U.S. economy. And I think the risks are underestimated currently in the equity markets. And the bond markets, I think, are taking that more into consideration. So look, the S&P, for example, if you look at the past 7 episodes that I talk about in monetary policy history, if we don't enter a recession, the S&P rockets on average 19% higher. But if we do enter a recession, of course, we're talking double-digit debt to the downside. So the message that I have is to be prepared for that ensuing volatility. Don't assume that the current trend is going to be semi-permanent in nature. The Fed is likely to cut, I think, 25 basis points in September, and then go on a quarterly pace at 25 basis points. Likely, the terminal rate is going to be a lot higher than what the markets are anticipating if we don't go into recession. I think that's the only way the Fed really can attempt to hit that 2% target.
What about sort of the other risk, not necessarily recession, but that the economy is strong and they don't cut 25 basis points consecutively for the next meetings? Catherine, how much is your equity call, your more bullish equity call, contingent on continuation of cuts from the Fed?
Well, I think it's contingent on economic growth. I mean, we saw this last year. The markets are anticipating a lot of Fed cuts, and it didn't happen, of course. But it didn't matter because the economy grew very, very robustly, and it continues to grow robustly. So I think there's a bipolar fat tail risk in nature here, Danny, and you make a good point. I think you could see an overheating of the economy, and effectively that's kind of where we're at. I mean, potential growth in the U.S. is 1.8%. We're growing at 2.8%, so that's inherently inflationary. We have an output gap that's positive, inherently inflationary. So I do think that we're unlikely to hit the 2% target without recession. So really, I think that we're going to see inflation sticky above 2%, probably 2.5% without recession. And the Fed only cuts one time, 25 basis points per quarter over the course of 2025. So we get about 100 basis points in total Fed cuts, in my view, in this cycle.
I love that phrase, a bipolar fat tail risk. Written it down. It's embedded. It's embedded in my mind. Catherine, thank you, Catherine Rooney there, Catherine Rooney Vera, I should say, of StoneX. Coming up in the show with Danny and myself, Alaska Air and Hawaiian Air. They're a step closer to finalizing that merger. More on the deal. We've got all the details.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Brief. I'm Menace Graney alongside Danny Berger in New York. Now, it's a $2 billion merger between Alaska Air and Hawaiian Air. It is one step closer to actually happening. The DOJ decided not to challenge it. Sid Phillip is with us. He leads our global aviation coverage. Sid, this is an interesting twist, you know, given this administration's proclivity to be slightly anti-merger. So Alaska Air, Hawaiian Air, the merits of the deal, what gets it over the line to the next regulator?
Yeah, so morning. So for the deal, it's actually sort of a good thing because they're one step closer to closing this, and the Department of Transportation is the only sort of hurdle that's left in order for the deal to go through, and that's a major departure for this administration, which has previously blocked deals like the JetBlue Spirit merger, as well as they've made JetBlue unwrap their partnership with American Airlines. So this is sort of contra to the previous steps that the administration's taken, and this will sort of give the combined entity about 50% of the Hawaii market, and it will sort of open, that's sort of $8 billion route, and so that is a sort of significant share of revenue and in terms of being able to capture that market.
Well, I think
so it's a fairly significant deal.
If I can jump in, because, you know, as both you and Manus so well noted, they had blocked that JetBlue Spirit airline merger. Do we need to be rethinking about the entirety of the airline industry and the ability to get mergers through if this one looks likely to be allowed?
It'll be an interesting perspective. I mean, it's still early days, and we still need to see what really happens with the whole transaction. But yes, it does bode well for future transactions potentially. I mean, at the same time, Hawaii is slightly different in terms of being able to sort of get a deal through, because a lot of the airports that both JetBlue, both Hawaii and Alaska fly to aren't slot constrained, and so they don't really have the sort of same limitations that the other airports do.
It depends whether, you know, if Kamala Harris is president, does she take the same approach as Biden? I mean, different people have talked about their approach. Will she pursue such an antitrust agenda? But then Biden was trying to pursue the progressives when he was coming to power. Let's talk about Saudi Arabia. They're never far from a few dollars to spend. The Sovereign Wealth Fund is in exploratory talks, we understand, with Boeing over starting a cargo airline. So the competition is really set to heat up in the Gulf. This is what carried many of those major airlines around the world through the pandemic, isn't it?
Yeah, so air cargo was the bright spot for the airline industry during the pandemic, and Saudi Arabia is really at the crossroads of traffic between Asia and Europe, and Asia and Africa and Europe. So they are looking to sort of get a piece of that pie. I mean, at the moment, Qatar Airways and Dubai-based Emirates are the sort of dominant players in the region, and Saudi Arabia is looking to challenge that. And so they're in talks with both Boeing and Airbus, as well as lessors, to potentially get aircraft like the 777 and the 350, the freighters, and so that they can sort of fly volumes of cargo around the world and basically challenge what Qatar Airways and Emirates are doing.
Never a dull moment in the airline industry. Sid, we appreciate it. Bloomberg's Sid Phillip. All right, from airlines to retail earnings, we've already got quite a few. Today we get another one. It's home improvement giant Lowe's reports before the bell. Let's get over to Bloomberg's Dasha Afanasieva on this. Dasha, I mean, it was a head scratcher with Home Depot, because when they reported, it was this idea that everyone's deferring their big purchase items around the home, and yet the shares rallied afterwards. How does that set the stage for Lowe's?
Yeah, it was a funny thing, because I think there was this optimism that there would be interest rate cuts, and then eventually, you know, volumes would grow at these retailers. But Lowe's, like Home Depot, is expecting a decline in sales. Same-store sales are projected to fall 4.4% in the quarter. And I think we'll also be looking at the outlook, which, of course, Home Depot cut. And back to that enthusiasm and optimism over interest rate cuts, it could actually be misguided, because there would be quite a delay and a question mark over how long those lower borrowing costs would then filter through to consumers renovating their houses in order to sell their homes. And that's, I think, the question also is this deferred. Home Depot put this positive spin on it, because the idea of the deferred spend, the implication is that it's not that the people don't have money to spend. There's a degree to which they have the money to spend, but they're waiting until things are cheaper. So there's this kind of pot of gold at the end of the rainbow, and we'll see if that comes to pass.
Yeah, well, certainly the bargain hunters turned up at Walmart and some of the others. The question is, when those rate cuts come, just how furious will the, I suppose, the velocity of that housing market turn over? Dasha, thank you very much. We'll keep our eyes down. Stocks up nearly 9% for the Dasha Afanasieva on the look ahead for lows. This is state of play on markets. We're flat at the moment, but you got to say the equal weight, Danny, I think we both touched on this, is at an all-time high. Day 8 of the US rally, and $3 trillion in value added back. Go stocks.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching The Close.
Welcome to Balance of Power.
This is Bloomberg. Welcome to the world of decentralized finance.
We thought we'd take a look at Bitcoin versus the S&P 500.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
It's really a tale of two cities in crypto.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Your Bloomberg Brief, Danny Berger and Manus Cranny in New York. Okay, let's get you set up for your trading day on this Tuesday. Lowe's is going to be reporting before the bell, and then more earnings of an economic bend. Toll Brothers will be out with results after the market close. And then on to politics. It's day 2 of the DNC, where former President Barack Obama will be speaking today. Manus.
Danny, tech and media are the power movers this morning. Paramount, we've touched on this. Edgar Brofman coming in with a $4.3 billion bid for taking control of Paramount Global. Will Shari Redstone shred the deal with her other cohorts? AMD extending its gain. They're agreeing to buy the server maker ZT Systems. It's a cash deal and stock transaction valued at $4.9 billion. Stock has bid 1.4%. Palo Alto up 2.25% this morning. They're giving an upbeat forecast, and you got it, boosting the buyback.
And meanwhile, this equity market, Manus, looks to put in another 9th consecutive day of gains. If it can do so, it would be the longest winning streak since 2004. This just out from HSBC, Max Kettner and the team saying that they expect continued outperformance of risky assets, even with a part reversal of recently benign inflation readings. The reason, Manus, is because we focused back to growth, and the growth figures have been coming in stronger, just the data in the past week.
Yeah, and if you look at, it's the same kind of narrative as we had. I mean, Max was full bull when he was here. You were on surveillance. He was so bullish last Friday. It was like he couldn't get any more extreme in their positioning. Also, Goldman Sachs are saying, look, the pain trade on U.S. stocks is higher And that is for them the momentum. And your tail risk, the fat tail risk is what? Jackson Hole?
Yeah, well, Morgan Stanley said something similar. We've only loaded 50% back up from where we were on those losses, which continues to suggest the pain trade is higher. So we'll see if Powell and co. deliver in the next few days.
What's it like moving from the East Coast, where everything is finance and money, to the West Coast, where everything is technology? Did you fit in right away? And did you really know how to use all the computer things that they give you to use?
So it was pretty fun. There were plenty of times where I would sit around in meetings and literally I would be Googling terms. And at one meeting, Larry Page actually caught me Googling terms, and he kind of pointed that out to other people in the room, which was a little embarrassing, but I figured there were some things that I could do that they couldn't do. And so it was a learning curve. And my dad always, he taught me at a young age a term that I've used constantly with my teams. He said, in his lab at Stanford, if a physicist could not define a quark in under 30 seconds, they didn't know what they were talking about. And so I use the quark test all the time. If somebody's rambling on and they can't get to the point, they probably don't know what they're talking about, they fail the quark test. My finance team knows this quark test. And at Google, I'm working with amazing computer scientists, so they never fail the quark test. They can explain things really clearly, which shoots you up the learning curve.
But did you understand what they were talking about from the beginning, or did you have a special tutor that's taught you technology? Or did you
I had actually run tech banking and took Google public, so I had a little sneak preview.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Market is in a secular bull market.
We just haven't been talking enough about how resilient corporate earnings have been through all of the volatility.
Some of my models say we could go to 5,800.
We do think the big rally's done.
We think that the big equity market moves that we saw and the big fixed income moves that we saw were driven by recession fears.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Coming into Tuesday on an 8-day winning streak on the S&P 500, the longest daily winning streak of the year so far. Like from New York City this morning. Good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Sneak peek of the price action. Equity futures positive once again. You make it day 9. It's the longest daily winning streak going all the way back to 2004. Lead quote for the team here at Bloomberg News in the last 24 hours comes from Goldman Sachs' Scott Rubner. The pain trade for equities, Lisa, is higher, and the bar for being bearish at the beach into a Labor Day barbecue party is high.
Not only because people want to have fun at their Labor Day barbecue, but also because this is the right kind of melt-up. It is not just stemming from big tech. This isn't just stemming from a small select group of names. If you look at the equal-weighted S&P 500, it notched a new record high yesterday, even though the market cap ended up about 1% away from the all-time high. So this is the right kind of kind of rally that people want to sink their teeth into.
And it's validated by the fundamentals, the better data we've seen over the last week or so. And you hear this echo around Wall Street from bank-to-bank, economist to economist. This came from Morgan Stanley's Sarah Wolf. Sure, we're slowing, but the fundamentals do not point to a slump. Bank of America's Mike Gapon, slow and steady, not fast and furious. This came from Max Kettner just moments ago, Lisa. The cyclical data continue to defy recessionary fears.
Part of the issue is it's not just simply what we saw with jobless claims coming in below expectations in the prior reading last week. It's not just retail sales coming in strong. It's also the fact that when you look at the earnings, you're actually seeing earnings growth beyond the Mag 7. You're starting to see expansion of profit margins in a way that we haven't seen in several quarters. We're seeing sales gains that we haven't seen for a couple of years. These are kinds of green shoots that people want to see into a rally that go beyond just some sort of hopium that we saw earlier in the year.
Just turns the volume down on the drama going into that speech in Jackson Hole, Wyoming with Chairman Powell a little bit later on this week. Before we get to that speech, we've got some thoughts from the former President Donald Trump, someone we have called Federal Reserve Chair Donald Trump in the past a few times. He caught up with the team here at Bloomberg, Mark Niket, sitting down with him and asking him a few questions about the Federal Reserve, revealing his position, I think, on where things stand. There's been plenty of speculation, some comments to us directly here at Bloomberg a number of months ago. Also some comments we've seen to the Wall Street Journal, a report, you remember that one back in April, that maybe an incoming Trump administration would look to blunt the power of the Federal Reserve and have some influence over it. Let me share a couple of quotes with you. A president certainly can be talking about interest rates because I think I have very good instincts. That's the former President Donald Trump. Goes on to say, Anne-Marie, that doesn't mean I'm calling the shots, but it does mean that I should have a right to be able to talk about it like anybody else.
And he also said he did talk about it in the past, and he was able to jawbone the Fed. It's been murky and a bit foggy on where Trump stands at the Fed because of that Wall Street Journal report in April. But we caught up with Scott Bessent, the former CIO of Soros Global Fund, who talked about the fact that he would challenge the Wall Street Journal to release that 10-page report that allegedly exists within the Trump camp on the executive branch having more of an influence on the Federal Reserve. This is a little bit different, though, than what we heard from the former president earlier in the month, who said he thinks that he has better instincts and a gut, so he thinks that he should have a say. Now he's just kind of saying, I think it's fine for a president to just voice their opinion, which we have seen from presidents, Democrat or Republican.
The hard thing with this election cycle in general, one of the hard things, is that it's true. It's very hard to know what to take on its face or what is just basically a flavor, sort of a vibe to put out there. And I think this really underscores that, because there is a pretty big difference between trying to pull the strings and call the shots and say, I should be the Fed chair, versus I can weigh in. I'm a human. I happen to be also president, so I've got an opinion too. Those are two different things. But the fact that they can be conflated shows on both sides how we don't understand policy versus just simply rhetoric.
We'll assess both the vibes and the policy, we hope, at some point through the hour, right here on Bloomberg. Equity futures right now on the S&P 500. If you are just joining us, we're just about positive on the S&P. Yields are coming in just a touch on a 10-year, 386.92. Had a ton of dollar weakness over the last few weeks. Euro dollar back to about 110.77. That currency pair largely stable this morning and pulling back just a little bit on crude. We're down 0.6%, 73.96 on WTI. Here's the lineup for this hour. We'll catch up with Joe Quinlan of Merrill and Bank of America Private Bank on why he does not see a U.S. recession. Ed Mills of Raymond James on why you should expect more scrutiny of M&A under Harris. And Drew Redding of Bloomberg Intelligence as Trump calls Harris's housing plans a big mistake. We begin with our top story. 8 days of gains on the S&P 500 ahead of Fed Chair Jay Powell's remarks at Jackson Hole on Friday. Joe Quinlan of Merrill and Bank of America Private Bank writing the following. There's no U.S. recession in our forecast because rumors of the demise of the U.S. consumer are greatly exaggerated. Investors are missing the fact that not all consumers are created equal. Joe joins us now for more. So Joe, let's go straight there. Let's get straight into it. What are people missing?
They're missing the fact, John, that the higher income households here in the United States, the top 10% account for 20% of overall consumer spending. And they're doing fine. They have jobs. They have the wealth effect from the bull market in equities and housing. They're spending. And they may be coming down a little bit here. And they might be a little price resistant about an airline ticket that costs $10,000, so to speak. But they're out there spending. Lower income households for sure are feeling the pinch. But overall, the consumer is hanging in there. That's why the economy is going to continue to expand.
Based on the price action, Joe, it sounds like a lot of people are starting to agree with you. We've got an equal weight on the S&P, equal weighted S&P, record high. NVIDIA, big tech still doing well. 6 days of gains, a rally of more than 24% over 6 sessions. Joe, the market's starting to get it. 6 weeks ago when we last spoke, you said clients were still comfortable in cash. Are they still comfortable in cash, or are you starting to see them deploy it over the last few weeks?
We saw the animal spirits kick in a couple of weeks ago, John, with a downturn. But I will say a lot of our clients still like to hold money market funds because of the election, because of the uncertainty. But they are warming up to equities, coming into the fixed income market. So some of that mountain of money is starting to move elsewhere. But we're not there yet because you talked about earlier on, the election setup is very uncertain here going into post-Labor Day. So that's the one big variable holding back that mountain of cash coming back into the equity markets.
Joe, is it just simply that they're concerned about a particular policy, or they don't have any clarity whatsoever? So after November, after early November, you're going to end up with a flood of cash that goes into all assets regardless of who wins?
Well, it's a good question, Lisa. I mean, a lot of, honestly, a lot of households can't decide who they want. And, whether it's the Democrats or Republicans, so they're sitting on their hands waiting. So it is that uncertainty. It's just about the character, the personality, the policies. The country's divided. And so our clients are just saying, we can wait and see. They are in equities. They are in other parts of the market. So if they got a little cash on the sideline, they're happy holding it, getting 5% plus. But I think, Lisa, you're right. We get clarity from the election. And you talked about it earlier. What you say on the campaign trail versus what you do in the White House, 2 different things. So I do think there's a big surge of capital coming post the election.
Joe, I love that you point out that people are still in equities, and yet money markets are really attracting a lot of the funds. Is the election jitters really focused on longer-term bonds, on the deficit, versus, say, an equity call?
That's a key issue. That's another, that's when you talk about politics with our clients, the debt and the deficit comes up. Who's going to spend more? Who's going to drive more debt? How do we service it? So that's keeping our clients very concerned about the longer term. But at the end of the day, they're still going to buy U.S. equities. I mean, Lisa, a lot of our clients, they're differentiating between politics, Washington, and then the real economy, the private sector, technology, energy, industrials. They see real long-term opportunities in the private sector, despite the circus of Washington. So they're kind of differentiating and putting their money where their mouth is by investing.
Joe, when you get asked these questions, who's going to spend more? Who is going to be worse for the deficit? What's your answer to your clients?
I have no answer. I mean, either or, right? Right? I mean, we have, countries still have to work through our financial, problems. But if you look at historically speaking, you can make the argument tariffs would not be good for the U.S. economy. It could be inflationary. You could argue that more housing subsidies and so forth. You can make either case, but we make the case that, either or, Democrats or Republicans, the U.S. has some work to do when it gets getting its financial house in order. But how do you do that, Anne-Marie? You grow the economy. Uncle Sam has a private sector behind him that's growing GDP, growing the denominator, and that's what matters.
Okay, well, let's talk about the private sector behind Uncle Sam. We have reporting that Kamala Harris is going to maintain a Joe Biden proposal of raising the corporate tax rate to where it is right now. Where do you see the corporate tax rate going when there's going to be a massive debate on Capitol Hill next year?
I mean, Anne-Marie, think of it this way. In the first half of this decade, we've spent more money fiscally than we have in decades. So I think the second half of this decade, there's going to be a reckoning, whether it's Democrats or Republicans. This country has a reckoning coming when it comes to the finances. And I do think we have to think about, retirement, Social Security, raising taxes, individuals, corporations. We have to have that debate. There's no doubt about that, because we cannot, our fiscal path, everyone knows, is unsustainable. So how do you fix that? You can inflate it, you can grow, you've got to raise revenue. So I think investors are coming around to that. They're not looking for anything radical, but I think the country's ready to have a debate about raising fiscal revenues in the second half of this decade after how much we spent in the first half. So I think we're ready, but to your point, to what extent, how large, who pays, who doesn't, that's, the debate in front of us still.
Hey, Joe, it's great to catch up, sir, as always. Joe Quinlan there of Maryland Bank of America Private Bank. Thank you. We need to get to some earnings. It is tough in home improvement. Lisa, we saw that with Home Depot. You see it in Lowe's this morning.
Yeah, what you have is full-year comp sales down 3.5% to 4% versus the expected down 2 to 3%. Interestingly, the shares are not necessarily really moving that much on this. They're cutting full-year guidance, talking about the same dynamics that we saw from home improvement, as you mentioned. We'll get through some of the other issues. It did talk about how there is this sort of macroeconomic environment that's causing some pressure. But again, this raises the question, how much is this ultimately a housing issue and how much is this a broader, weaker consumer? Because what we're hearing from the likes of Walmart is different than the Home Depots and the Lowe's of the world.
I wasn't choking up and getting teary over Lowe's numbers just moments ago.
Sure.
My voice was slightly breaking.
I know how you feel about Lowe's.
It's emotional. It's
I know.
very emotional.
You and your home improvement projects.
Housing is a big issue right now on the campaign trail as well. There are some talk of tax incentives for home builders. There are some talk of tax incentives for home buyers as well. We've heard that from Kamala Harris's side, starting to get a glimpse of what the Donald Trump side of things thinks about it.
Well, he doesn't exactly, I don't think, want to come out and say, no, I won't do that. I won't help the first-time buyers. What you continuously see every single day on the campaign trail is who can out-populist the other candidate. That's what it feels like to me, whether it is tax on tips, whether it is housing. It feels like no one wants to go back and say, child tax credits, that was a long-time Democratic goal. Now it seems like Republicans want to extend that. No one wants to say to middle-class Americans, no, the government is not going to help you out.
Drew Redding of Bloomberg Intelligence on this story. A little bit later this hour, we'll catch up with him in about 30 minutes' time. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Is Danny Berger. Hey, Danny.
Hey, John. U.S. Secretary of State Antony Blinken said Israeli Prime Minister Benjamin Netanyahu has accepted a ceasefire proposal to stop the war in Gaza. He said the next step is for, quote, Hamas to say yes. He called the proposed accord a bridging agreement, acknowledging that not everything is spelled out in detail. Before those comments, Blinken called it the best and maybe last opportunity to free hostages taken in the Hamas attack. He's now traveling to Egypt and Qatar for more talks to determine the next steps. The European Union is raising tariffs on Teslas imported from China. The European Commission said this morning that Teslas made in the country would be subject to an additional 9% levy on top of existing 10% duties applied to all foreign-made cars. Meanwhile, the proposed tariffs on other car makers have been slightly revised. MG maker SAIC, Geely, and BYD are each facing additional duties, 36%, 19%, and 17% respectively. The parties now have 10 days to provide comments and request hearings on the proposal. And Apple will make the most expensive iPhone Pro and Pro Max models in India this year for the first time. Its partner in Asia, Foxconn, will start assembling the new phones within weeks of the fall launch. Apple's push into production out of India is a major step to try to diversify its output beyond China. And that's your brief, John.
Hey, Danny, thank you. Up next on the program, Biden pushing the Harris agenda.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career. They'll continue to lead America forward, creating more jobs, standing up for workers, growing the economy.
That conversation up next, live from New York City. Good morning.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Live from New York City, welcome to the program. Quick check of the price action. Equities just about unchanged on the S&P 500. We've got some earnings in the next 24 hours. You'll hear from TJ Maxx and Target, just getting a feel, more of a read for what's happening with the US consumer. Last week we heard this from Home Depot, and you're just getting an echo of it. Again, Lisa, from Lowe's this morning. They have to cut their full-year guidance. Home improvement is a real struggle in this country.
How much is this because people are paring their expenses, and how much is this that they just built all of the garden sheds and all of the potential infrastructure for their children during the pandemic? I mean, how many home improvement projects can you do at a certain point? People want to get out there and spend on travel. I mean, is this basically the post-pandemic rolling ball of money spending that has shifted away from the home improvement and the housing sector?
Every time you cover these stories, it sounds personal.
Well,
it's
is
like you've
personal.
been there, like you built the decking yourself.
You know, maybe I did. I mean, no, but this is exactly what they're talking about, are things like that people did during the pandemic that maybe they're not doing as much of, because how many decks do you need?
Home Depot, Lowe's, cutting their outlook in the last week. There's another one. Under surveillance this morning, Biden pushing the Harris agenda.
Selecting Kamala was the very first decision I made when I became our nominee. And it was the best decision I made my whole career. They'll continue to lead America forward, creating more jobs, standing up for workers, growing the economy, lower the cost to American families so they just have a little more breathing room. Kamala and Tim will continue to take on corporate greed and bring down cost of food.
So here's the latest. Democratic presidential nominee Kamala Harris looking to raise the U.S. corporate tax rate to 28% from the current 21%. This coming in response to questions around how the vice president would fund her economic plan. Ed Mills of Raymond James writing the following. From Harris's economic speech on Friday, the overall theme of lowering the cost of key items picks up the shrinkflation mantle from President Biden, but takes it a step further. You can bet this means more scrutiny on M&A transactions. Ed joins us now for more. So Ed, if you were to construct a trade off the back of some of these comments in the last couple of days, would it be long home builders and short consumer staples?
Well, I think long home builders from the kind of new tax credits for housing, the down payment assistance, as well as for the first time that I have really seen a push to have actual kind of supply side kind of additional housing units. But when we add in the child tax credit conversation, which now seems to be bipartisan, that's actually a nice boost for consumer spending. If we were able to go back to where it was an advanceable monthly payment, I could bet you that consumer spending is going to go up, especially in low and moderate income households. So I wouldn't kind of say this is something that would be long housing, short consumer. It'd probably be long both, quite honestly.
Ed, John mentioned Kamala Harris' proposals to raise the corporate tax rate to 28%. It feels like it's the same plane and different pilot when it comes to Biden versus Harris. How are you differentiating the policy proposals from these two individuals?
Yeah, Anne-Marie, you're right. As it comes to the tax policies, Joe Biden had proposed a 28% tax rate when the individual tax rates expire on December 31st of next year. I think this only happens if there is a Democratic sweep. I look to Kamala Harris's running mate, Tim Walz. In Minnesota, Democrats have had a tradition of increasing taxes and then winning re-election. They think that some of these tax policies are pretty popular with the American people. When we look to next year, when these taxes expire, if there is a divided Congress, there still might be a little bit of a maneuvering among Republicans. The chairman of the House Ways and Means Committee, a Republican, Jason Smith, he said he's polled all his members And something that consistently comes up is that the 21% current tax rate might be too low, and there's openness within Republicans to raise that. So I do think that 28% is going to be too high. However, I could see next year, almost regardless of who wins, especially if it is Harris, there would be an increase in that corporate tax rate. But to your point, Anne-Marie, about kind of how to differentiate, we still haven't had that sit-down interview with Kamala Harris. We're still only getting some of the early details. There's going to be some tweaks. There's going to be some breaks. But for the most part here at Raymond James, we're saying whatever was the Biden-Harris campaign and administration is likely to be how Harris is going to propose things over the next couple of months and throughout her administration if she were to win.
Staying on taxes, because this is the big policy debate for 2025, Donald Trump has told us that he's willing to go as low as 15%. But isn't the corporate tax rate especially important for the fact that this is enshrined in law? This does not sunset like some of the individual tax enhancements we saw under the Trump administration.
Yeah, Anne-Marie, you're right. So if Congress does nothing, the corporate rate stays at 21%, but about $4.6 trillion worth of other taxes expire on December 31st. For a lot of Democrats, they're fine to let some of this expire, partly because of the fact that one of the things that expires is that $10,000 cap on state and local tax deductions. They would say taxes would be going back to what they were when Barack Obama was president, and it would be $1 trillion tax relief to blue states such as New York, California, Illinois. You go down the list. That's where compromise might come in. When you look at the corporate tax rate, for every 1% change, it raises about $130 to $150 billion. So going up to 28% is $1 trillion tax change. And when Congress is looking at this, they always get that score and try to see how much money that they want to spend or go into deficit and how much they want to raise on the other side. So when we look at other Harris proposals, calling for an increase in the tax rate to 28% gives her $1 trillion to possibly use on other priorities.
Ed Mills, you've been doing this for a very long time, and you've been trying to scrutinize policies, and it's refreshing to look at policy and try to analyze it. But at this point in the election, is it more theater than actual substance, given the fact that the likes of Michael Zezas of Morgan Stanley came out and said with the National Convention, Democratic National Convention, expect more political messaging than policy signals? This is about the vibes, the good feels, rather than actually anything concrete that we could possibly analyze. Is that kind of us trying to make something out of nothing at some of the utterances that probably won't see the light of day, depending on the makeup of Congress?
Lisa, you're right. The goal of the convention for Democrats is to keep the good vibes going, try to keep this honeymoon going for as long as possible. I'm always reminded of my saying of the, in politics, when you're explaining, you're losing. Most of the policies that have been put out there are either things that have been the policies of the Biden-Harris administration or things that are going to be very well poll tested. Usually you get a bounce out of the convention. For Donald Trump, he didn't get the bounce out of the convention, partly because Democrats stole that bounce by switching Joe Biden for Kamala Harris. But if they can get that bounce, we're only a couple of months away until this election. They're hoping to keep those good vibes going, keeping the momentum, seeing if they could expand the map and win some of those crucial swing states and see if Harris and Walz can win in November. Explaining, getting into the details, being wonky, I don't think from a political perspective really helps them out all that much.
So, Ed, if it's just about the vibes, do you think protesters in Chicago could steal the limelight?
It is possible. However, I think one of the most notable parts of Joe Biden's speech last night was where he said those protesters outside have a point. Democrats know that in 1968, the protests and the divide that occurred in Chicago for the Democratic Party was a generational shift away from Democrats and something that destroyed their chances at the presidency. The protesters have come and been fewer than expected, trying to highlight the push to have a ceasefire, trying to tamp down on that disunity that has historically been within the Democratic Party is an opportunity, John, to possibly try to keep those good vibes going. And they know that's the biggest threat. So they are absolutely focused on that. And so, if they can keep that under control, I think you have to assume that this is a better chance for Democrats than anticipated.
We'll see how the week works out. Ed, it's good to catch up, sir. Ed Mills there of Raymond James on the DNC in Chicago. And we appreciate the Lisa rant, as always. We're going to clip that and play that for the next 2 months, just on repeat.
Yeah, and then
Every morning.
I'll go canoeing in Jackson Hole, because evidently, that's not going to be Blockbuster either.
You're going to send us pictures this year if you're canoeing in Jackson Hole.
Yeah.
Okay, I'm looking forward to that. You taking TK?
Oh, yeah, big time.
That's what I want to see.
Will he sink the boat?
The boat.
Okay.
Hey,
all right.
hey.
Whoa.
Just got to sort of suggest the joke.
The audience mind.
There are many global investors that aren't interested in China anymore, but there's a lot that are. And obviously the local investors have money in China and are doubling down on investing in China. Many of the Asian investors, and in fact a lot of the Middle East investors, the Americans are gone away. Therefore, there's an amazing opportunity to put capital to work and get returns which are excess what you would get in other places. Where there is lack of money, there is usually opportunity. So we continue to build out our business in China. It's just where the money's coming from is different. And so we're raising local money in China for investing and bringing those that choose to be there to invest in China. So it's just a different, where the money's coming from is just different.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
8-day winning streak on the S&P 500 and looking to make it day 9. Your scores look like this. Equity futures positive by 0.06% on the S&P. On the NASDAQ, up 0.1%. The longest daily winning streak of the year so far. The longest winning streak going back to November of last year. And if you make it day 9, we're talking about the longest daily winning streak going back 20 years. Lisa, a ridiculous rally.
2004 is the last time we saw 9 straight days of gains, and it comes at a time where we begin with sort of this meandering, can we make it another day? And then the data just drips in to give a sense that, yes, this is an economy that's broadening out, and you're seeing it in the earnings, and you're seeing it in the underlying data. A lot of people say it ultimately lasts with the non-farm payrolls in September. That will really determine whether this can continue with this immaculate disinflation, a labor market that's not breaking down, and a consumer that can keep spending.
Sounds wonderful, doesn't it? We've all read the same notes. September 6th, just circled on the calendar.
We
the
have,
payrolls
haven't we?
report. It just repeatedly goes back to September 6th. This equity market, this rally, this bond market, all these moves are at the mercy of whatever we see in the August jobs report on September 6th.
Yeah, I wonder how much that's going to change as people talk about maybe CPI, or you talk about some of the auxiliary data when you make JOLTS great again. I mean, at a certain point, you've got other things that might come into play, but at this moment, because of the lack of certainty in the overall data, I mean, yesterday we had the leading economic indicators come out. They were actually really disappointing. Nobody talks about it. Everyone just sort of fluffs it away because it's not a major indicator and it's not jobs. So how are we going to continue with that kind of sense?
Another read on the consumer tomorrow. In the next 24 hours, we'll hear from TJX, we'll hear from Target as well. You'll get jobless claims as well on Thursday, so look out for that. Let's switch to the board and turn to the bond market. I want to sit at the front end of the curve just for a moment. The 2-year, really well anchored, Lisa, at about 4.05%. Just really well anchored going into this Federal Reserve get-together in Jackson Hole.
I love the narrative kind of shifts that we see. There was a time, I say 2 weeks ago, where people were talking about a hard landing, the likelihood of recession, and the Fed would have to cut more aggressively. Now you're seeing increasing pushback from Fed officials going into Jackson Hole against a 50 basis point rate cut, talking about the strength of the economy, and yet the need to reduce interest rates just simply to keep the same type of restrictiveness given how much inflation is coming down. It's that Goldilocks feel of immaculate disinflation returning once again. And that's the reason why you see a well-anchored 2-year with risk assets doing very well.
That's the bond market and stocks. I just want to finish on foreign exchange. Can we turn to dollar yen? Take a look at dollar yen. Some yen strength on the board, just a little bit, again, after quite a few weeks of it now on dollar yen. We're back to about 146. This story from the team out of Tokyo in Japan. The BOJ releasing a pair of research papers highlighting the persistence of inflationary pressure in the economy. The takeaway for a lot of people trading this currency, just the idea that another interest rate hike might be on the table. These reports, of course, came with a standard disclaimer that the views belong to the authors and don't necessarily reflect the BOJ's official stance, but obviously it's encouraged that talk overnight.
Basically, this one paragraph in particular, business price setting behaviors are shifting amid intensified upward pressure on wages. Just those words, upward pressure on wages, is enough to get people excited about the potential for further rate hikes from the Bank of Japan.
And a little bit more yen strength on the screen. Dollar yen 146.38. Under surveillance this morning, one of our top stories, U.S. Secretary of State Antony Blinken saying Israel has accepted a ceasefire proposal to pause the war in Gaza. And the next step is for Hamas to say yes. Blinken will now travel to Egypt and Qatar to understand what their leaders are hearing from Hamas. There is just an impression in the last 24 hours that now is the time to finally get this done. We have a big opportunity to close a deal.
My big question is, with Antony Blinken coming out and saying this, does this mean that Benjamin Netanyahu has given his negotiators that room and that breath needed to potentially make that agreement? And this comes at a time when it's critical for the Democratic Party to shore this up. What happened yesterday when President Biden spoke to the DNC? You had thousands of protesters in Chicago, some of them even going through the fence, and there were arrests last night. So this is a huge issue going into the election, and I think that's why the pressure right now, and they keep saying this is a last-ditch effort, because they know that they need to get this done before November 5th.
All I can say is I hope that they actually do get something done on all sides, just simply because there is so much suffering right now, and the more that you can resolve that, there are human lives on the line. At the same time, a lot of people have thrown a lot of skepticism over just how willing people are to negotiate. So we'll keep our eyes on it.
We've come close before, and we've ended up without a deal. We're coming close now, and we hope we end up with a deal. I want to bring you the latest on a conversation we had with Donald Trump, the former president, defending his criticism of the Federal Reserve. In an interview with Bloomberg News, Trump saying, quote, "A president certainly can be talking about interest rates because I think I have very good instincts. That doesn't mean I'm calling the shot, but it does mean that I should have a right to be able to talk about it like anybody else." Lisa, you mentioned this a little bit earlier this morning, trying to draw a distinction between a change in policy and actually just, as you were, the same, I'm going to talk about it more and more, but ultimately it's not going to mean too much?
The problem is that traditionally, a lot of candidates will say a lot of things. You kind of have a sense of what to take seriously and what not to. I feel like it's increasingly difficult to tell because at this point, it's so light on policy and it's so light on exactly where a party is going to coalesce that it is very challenging to understand what the policy actually be versus the rhetoric. This just muddies those waters. So the people who want to say it's just noise, he's just trying to cater to a certain group of people, can be loud. And the people who say, well, he actually wants to do this, can also still be there. It's sort of, you can have your cake and eat it too and leave us all with less clarity on what actually is going to be policy.
Well, it's becoming clear that Fed independence has actually become a hot button issue in this election cycle. And a lot of this started in April when the Wall Street Journal came out with a report saying that actually there was plans being drawn up, a document that was being developed for a Trump 2.0 administration, the White House, to have more influence on the Fed's decision-making process.
What do we call that in foreign policy? Strategic ambiguity? Is that what this is?
Is that just sort
around
of
the Federal Reserve?
The ever-present
like
state of affairs in
Like
Washington?
the whole campaign at the moment,
Exactly.
Isn't it? Want to get you an update on some earnings. Lowe's delivering a disappointing outlook, cutting its full-year guidance as the soft housing market keeps consumers on the sidelines with big purchases and renovations on hold. The company expecting comparable sales to fall 3.5% to 4%. The previous range was an estimate of a 2 to 3% decline. Their stock is down by about 0.9%. Lisa, we've said this a few times already today. This is just an echo, a repeat of what we saw from Home Depot just last week.
And they did outperform in the second quarter, so they did reduce their full-year forecast, but showing some bright shoots, I guess, under the hood. This also has been a pretty beaten-up sector year to date, so it's not like one of the big winners and is sort of casting some cold water. Are people going to go back to building decks? That's really the key question.
Would you like to build some more decking?
I would like decking.
This is so personal to you. I know it is. Let's turn to energy and the energy sector. The boom in AI spending putting a strain on the U.S. electrical grid as companies race to supply power for data centers. Mary Powell is the CEO of Sunrun, a solar rooftop company, and says forecasts show the U.S. needing the equivalent of about 34 new nuclear plants over the next 5 years to meet rising demand. Mary's with us around the table. Mary, good morning to you.
Good morning to you.
Great to have you with us. First question, what is a utility exec doing at the largest rooftop solar installer in this country?
Oh, well, what she's doing is helping to change America and bring more affordable, resilient energy to homes all across America. So as a utility CEO, way back in, I would say, mid-2000, 2005, 2006 era, it was so obvious, so painfully obvious to me that the utility grid itself was not a socioeconomic solution for the long term for America. With the pressures on costs and then climatic events, it was becoming very, very clear that we were going to end up where we are, which is, you know, over $100 billion spent last year, trillions on the horizon, with no solution in sight to lowering costs for Americans and delivering resilient power.
Can you talk to us a little bit more about the initiatives that you'd like to see deployed to stabilize the grid at times when it's super stressed, when a demand is really, really high? What would you like to see happen?
Well, what I'd like to see happen is what we're doing expanded dramatically. So again, part of why I'm passionate about what we do, you know, we just hit 1 million customers. That represents 1 million people with the ability to generate and in many cases store that clean energy and then supply it back to the grid when it needs it. And we are doing that all across America. In fact, we just did a proof of concept pilot using Ford F-150 Lightnings and showing how if you have that plugged into your garage, you can also support the grid and help make the grid more affordable and resilient for all. So the vision has always been the same, and it's what I did as a utility CEO, is that prove that having distributed generation assets all across America can help be the solution for bringing down the cost of the grid in the future.
There's sort of an existential question we've been talking a lot with policymakers, which is how independent can the U.S. be while trying to provide renewable energy that's affordable to the United States? A lot of the supply is coming from China to create solar panels, to create some of the renewable energies. How much does the industry really hinge on ongoing access to those materials, to those supplies from China?
Well, there has, I mean, from a supply chain perspective, the story's actually gotten stronger recently, so we're feeling really good about robust supply, both in solar and storage, but also with the Inflation Reduction Act, as you know, and the domestic content adders that are in that, what you're seeing is jobs, factories expanding in America, and so we expect to have access to more American-made panels in the future, and we also are already seeing significant benefits in the storage space relative to that. So, you know, my view is what we do is the ultimate in energy independence. And not just for helping America become energy independent ultimately, but for those consumers. I mean, it is really powerful to have the sense of security, safety, and resilience in your own home when you're generating and storing that energy.
You talk about the IRA. There is a sort of pretty massive policy backdrop to this, and people think of the Biden administration as being more friendly to certain types of renewable energy sources. How vulnerable is the industry to some pretty significant policy shifts, regardless of depending on who gets into the White House?
You know, from a foundational perspective, let's remember that when President Trump signed the extension of the ITC, which benefits the adoption of solar across America, and what I would also say is the Inflation Reduction Act has benefited states very broadly. In fact, a group of governors, Republican governors, just signed a letter saying that they really support the continuation of the benefits of the Inflation Reduction Act because they're seeing jobs in their states. They're seeing the kind of development that was expected with the Inflation Reduction Act. So we're feeling that when you're doing something that's benefiting Americans, the chances are those that represent Americans are going to want to see those incentives continued.
Have you seen an uptick of Americans putting solar in their homes or retrofitting their homes because of the Inflation Reduction Act, because of these subsidies?
100%. I mean, what you're seeing is very much in the space of low and moderate income, the energy communities, multifamily housing. We are absolutely seeing that it opened up the total addressable market, and you're seeing it become affordable and accessible to even more Americans. You know, at the end of the day, our customers are saving money on average. They are, again, having a more energy independent, resilient way to power their homes and their lives, and that is very powerful. So hitting 1 million customers looks like just the beginning from my perspective.
To Lisa's point, though, about the supply chain, what is 60% tariffs of imports coming from China or 10% from around the world? What would that mean to your business?
You know, it wouldn't be a positive move in the sense of the overall cost stack, but let's remember that actually the panels are relatively, when you look at the total cost stack, they're actually a smaller percentage of the pie. So it is something that we absolutely will, you know, address and work our way through if we have to face that. You know, again, it wouldn't be a positive for the industry, but we also look at it as something that we've had to deal with in the past. We find ways to navigate and move forward.
Can we finish where we started? 34 nuclear plants over the next 5 years. How many do you think we'll actually build?
Maybe none. You know, so again, a huge part of why I felt it was so important to embrace distributed generation as a utility executive is I saw firsthand how hard it was to build anything anywhere. And it's not getting easier. Actually, what's happening is it's getting harder every single year, which also means it's getting more expensive because there's even more you have to do. So again, I was in a state, I built the state's largest wind farm. It was not large by energy standards and needs. It took 4 years and a lot of time and money to build it in a state that actually really embraced renewable energy. So again, these solutions, these big solutions that are needed are very hard, very expensive, and in many, many cases, particularly in the world of transmission, they're still talking about projects that they were talking about 20 years ago.
I'm going to walk away from this conversation quite fearful, so I'll give you the opportunity to have a correct course if you want. If you say we need 34 new nuclear plants over the next 5 years to meet this rising demand, but also say we might get none, what kind of crisis could we see in this country?
Well, I think what we're going to continue to see is we are going to see utility solutions come to the table for sure, but it is why I also really believe that this customer-led revolution to a more modern, innovative solution for the grid
fill the gap, do you think?
Is so powerful. You know, when you think about it, I mean, what we're doing now can power a city the size of San Francisco for several hours of a day. We are scaling at a level of, you know, in solar terms, 7 gigawatts a year, and we are installing now storage in the context of a couple of gigawatt hours a year. So as we scale and as America leans into those kinds of innovative technologies, 100% they can have a very, very powerful impact.
This feels like an ongoing conversation, so no doubt we'll catch up soon. Thanks for being with us.
Thank you.
Appreciate it. Mary Powell there, the CEO of Sunrun. Let's take the opportunity to get you up to speed on some stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hi, John. The investigation continues into a deadly yacht accident off the coast of Sicily. Morgan Stanley International Chairman Jonathan Bloomer is among those confirmed missing, along with British tech entrepreneur Mike Lynch and some family members. The Italian Coast Guard is leading search operations and has confirmed at least one person has died. Authorities believe the ship's mast snapped in a water spout, a form of tornado that forms over a body of water, with 12 guests and 10 crew members aboard. The easing cycle continues in Europe. Sweden's Riksbank lowered borrowing costs this morning for a second time since May. The central bank also signaled more cuts to come than they previously saw, now guiding to 2 or 3 more this year, setting a weaker outlook in both Sweden and abroad. The market has already been pricing in more substantial cuts as inflation undershoots the bank's 2% target. And Edgar Bronfman Jr. has made a $4.3 billion rival bid to take over Paramount. The media executive is offering to buy the Redstone family's national amusements for about $1.75 billion and invest additional funds in Paramount. The bid complicates the already accepted offer from Skydance. Bronfman is expected to argue that his proposal is better because it will cause less dilution. And that's your brief, John.
Danny, I don't know about you, but I refuse to discuss that story. Just refuse to. No more Paramount. I mean, seriously, it's going to carry on.
You know that. You know how I feel about this.
I think we all refuse to.
Well,
Up next on the program, get it done. The Harris Housing Plan.
My administration will provide first-time home buyers with $25,000 to help with the down payment on a new home. All to help more Americans experience the pride of home ownership.
That conversation up next, live from New York City. You're watching Bloomberg Surveillance.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Stocks on the S&P 500 positive here by 0.1%. In the bond market, yields not doing much, just about unchanged. Your 10-year 3.8787. Under surveillance this morning, the Harris Housing Plan.
And by the end of my first term, we will end America's housing shortage by building 3 million new homes and rentals. My administration will provide first-time home buyers with $25,000 to help with the down payment on a new home. All to help more Americans experience the pride of home ownership.
Here's the latest. Former President Donald Trump responding to Vice President Kamala Harris's housing policy, telling Bloomberg the plan to provide $25,000 to some first-time home buyers is a, quote, big mistake and would cause a larger shortage of housing. Trump also adding he's still considering some help for first-time home buyers. Drew Redding, U.S. home building analyst for Bloomberg Intelligence, joins us now for more. So, Drew, you're the expert. How realistic is it that we can build 3 million new homes and rentals in about 4 years?
Good morning. And look, it's good to see housing getting some attention this election cycle. It's an issue that matters for so many Americans. So it's good to see it at the forefront here. There's still a lack of details on the plans, how we're going to build this many houses, what we're going to do to make it affordable. There's been some discussion on offering builders tax incentives or opening up federal land. So the details on that remain to be seen. As it relates to the $25,000 given the first-time home buyers, I think you run into the issue where you exacerbate the problem that you're trying to solve. I mean, we don't have to look too far back to see that when you put that type of money in consumers' pockets, prices tend to rise. So you could expect to see that when it exacerbates the inventory shortage and it raises home prices. So that's definitely a concern.
Well, it also might be bipartisan. At one point in our interview with Trump yesterday, he said it was a big mistake, the idea, but then he still said, I might do that, and whether he would also offer anything to prospective house buyers. So you think potentially, if this was to be a policy out of Washington, this would increase demand and then would potentially increase the cost of buying a home?
Certainly. I think when you're increasing the purchasing power of the buyer, you're going to have sellers that realize that and raise prices. It's also going to create more demand from those buyers, and you're going to see the inventory shortage that we see in some markets exacerbated. So, yeah, I definitely think that's a significant consideration.
I'm curious, Drew, about where we are currently in the housing market. We have gotten some pretty dire data in terms of sales volume. We still do see prices continue to increase on average for homes, and we're seeing some pretty bleak earnings reports. We got that first from Home Depot, then this morning from Lowe's. How much is this just that people did all of the do-it-yourself projects during the pandemic and are kind of exhausted by it all? How much is this just truly a lack of capacity or willingness to invest in homes because there is this sort of stasis, this ice world going on in the housing market?
Yeah, so when you talk about the home improvement market specifically, there's a couple factors going on. And I think, the most important is certainly the housing market. We're below a 4 million annualized rate on home sales. We're at the lowest level in several decades. So certainly when you don't have that type of turnover in the housing market, you lose that investment associated with the homeowner, fixing their house up before they sell it, or someone making alterations as soon as they buy it. At the same time, what the industry is going through over the last, several quarters is a shift away from goods to services. So if you look at durable goods spending, you could see particularly in the home improvement space that we've started to normalize. I think the good news is that we've kind of gotten to that more normalized pre-pandemic level. So we think that will have less of an impact going forward. But housing is certainly something that's going to continue to weigh. We think that with interest rates starting to pull back now, you could see a little bit of relief. We saw it in some of the mortgage application data on both the resale and new home fronts. So we think as we exit the year, if rates can continue to play nice in the low 6% range, we think you'll start to see a little bit of benefit on the margin.
Okay, that was fantastically couched. That if we see well-behaved rates going to around the 6% level, how much do benchmark rates have to drop, do mortgage rates have to drop to start to see a housing market that resembles anything of the activity that we used to see? And I'm not just talking about the go-go days of some of the bubbles, but I'm talking about just a healthy market where you can buy and sell a home.
Yeah, it's a great question. We saw when rates got to kind of the 5.5% range has been defined as kind of the sweet spot. We heard that from a lot of builders that when we got in that mid 5.5% range that more traffic started to come through the door. So we think that's kind of the number that you're looking at. That being said, you still have a lot of people out there who currently possess mortgages below 4%. So we don't expect a massive unlocking of demand if rates continue to fall. And you have to, at the same time, you have to remember it's not just rates, it's home prices. Prices are up more than 40% since pre-pandemic levels. So I think affordability is going to remain a challenge until we could somehow unlock more supply. We are seeing that in certain markets. We think, the way the cycle's kind of evolving is more regional. When rates rose in the second half of 22, you saw more weakness out on the West Coast and some of the higher price markets. You saw some price adjustments there. Now we're starting to see that in the Southeast, and the markets that really come to mind are, Florida, even in Texas, where more inventory is starting to come to market. And we think that could put a little downward pressure on prices.
Hey, Drew, appreciate the update. Thank you, buddy. Drew Redding there of Bloomberg Intelligence. Classic policy dilemma. Duration mismatch between demand-side solutions and supply-side incentives. Demand-side solutions are immediate. You get that money straight up all at once, go out, buy a house. Supply-side incentives take much, much longer to play out, and you end up ultimately with higher prices. And you see this again and again and again. It's good politics, it's popular. It's economically complex.
When you start to talk about cold, hard cash, it feels good. But then you think about if everybody has it, well, then guess what's going to happen to prices? You could extrapolate this out further. If everybody is talking about incentives more broadly, how much are we talking about a higher inflation rate going forward, just in general, because of the consumer ability to spend?
When asked about this, Trump said it's a big mistake. It would mean a shortage of housing. It would increase price of housing. But then still he said, I also might do it. Populism, both sides.
You see this again and again and again on both sides of the aisle. Saw it in the UK as well. Same story. Coming up next on this program, Bob Michael of JP Morgan Asset Management, Jeanette Lowe of Strategas, Lee Klasko of Bloomberg Intelligence, and Mike Powell, Economic Advisor to Vice President Kamala Harris. You're watching Bloomberg Surveillance.
A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
In terms of how we should deal with the challenges that are, facing the world and also internally, I think it's just an opportunity also, an angle. And you could see that in a lot of activities that are picking up in this region.